Good morning. February 28th. We're going to be streaming stock market, trading futures, options, stocks. And yeah, let's see what we got going on. Get set up here a bit. Pre-market did quite a dance. Ridiculous dance, actually. This. Yeah. I think I got stopped out on my futures, I'm assuming. Oh. There's a little Yaz. Alright, I'm sharing this on Twitter and Discord. Alright. Now I shall link Discord and chat. Shall be great. There we go. $9.19, got about 10 minutes to open. We'll review what's happened so far. Other than that crazy roller coaster there. Don't have buying power. What in the world? What? It's broken. That gas came down a bit. Not enough to trigger my buy. But maybe it will. Futures contract got closed out. China's down more than 2%. Ransomware breach. Hackers access data about law enforcement investigations. Goldman Trading Desk net $3 billion in U.S. equities for sale from pension funds tomorrow. 10 minutes to open. Musk is forming a new AI research lab to develop an alternative to ChatGPT. Morning, Ace. Alright. This is the first free market BBY that's been down like this, I feel like, in a while. A little move up, and now it's down almost 2%. I don't see any catalyst for this free market move on SPY. Yeah. Some levels drawn in here. Got my short here. Guess I could have taken profits, but just in case, kept coming down. I didn't. I got stopped out, and now we're back down here. BBBY with a little green candle there. Nat gas popping up here to VWAP. Morning, Jim. Morning, Drew. Morning, Christopher. Yeah, I'm reading you guys on Discord. Catching up. Like 100% short interest that's reported. I'll just read this by Bullions. The setup with AMC is different. They picked half the shares of the common ticker and turned it into a separate ticker and preferred ticker APE. The dilution happened with APE and not AMC ticker. In BBBY case, we have the warrants that can be converted to common shares of the ticker BBBY. But as the NASDAQ rule, he shared the company needs to notify if there is any increase in common shares through SEC filing. Remember this also being the case when the bond exchange program was completed and we saw filings once the bond holders converted to shares back in October through December last year. That gas getting a little rally here into market open. The short interest increase as reported is another indication that dilution hasn't happened yet. What is that? How do you equate that? I guess the reported short interest is 98 point something. 98, 99.85. That's reported. It's probably multiple times the float. They self-report and fines are minuscule, and they can create synthetic shorts with options with ETFs, swaps. So we don't know the actual short interest. But I can be pretty confident the short interest is never lower than what's reported. Now SPY's coming down. This is where a stop loss kind of hurt me. About 3 minutes to open. So to me, no dilution yet isn't necessarily bullish. So there's no dilution and the price has dropped this much. I don't know how that's actually bullish. Also, once dilution is, like, once it's over, that'll be bullish, right? So, I don't know, I can see it both ways, really. A little early Yaz, yep, pre-market Yaz. Jeez, now SPY's coming down. Okay, reset, new day. Go Tesla. Is Tesla rallying? Investor day, yep. So I'm already loaded up on my shorts. It's after hours today, I think, right? Or is it during market hours? I might even average into it. Definitely looking like a buy the rumor, sell the news thing. Especially with how much SPY's come down since Tesla's just held up. Tomorrow's investor day? Oh, that's right. No, it's not tomorrow. Or yeah, it is tomorrow. Yep, good call. The warrants for the strike warrants are like $6.18 or 50 cents, somewhere in $6. That's right, today's Taco Tuesday, it's not investor day. I was way off. Alright, let me pause that. I was just selling off into open here. And yep, it's back. What was this? That gas is ripping back up a bit here. Hopefully more of a dip is coming. Oh man, look at that flush into open. Jeez. BBY goes to 6, that is excellent. Yeah, I think 6 is, I mean, that's still maybe undervalued. That was quite the sell-off into open. VWAP messed that chart up. Get rid of it. Okay, now SPY is continuing the flush. Let's see if we break. Very curious if GME holds up here. Today's kind of make it or break it, I think, on it. Needs to have a pretty green day to solidify this as a support, I think. Or it's going to be a pretty red day. Clove is up. Rover is up. Clove's up 8%. LMFA is up 8. Centro. Morning, Jason. Oh, this is a hopium pattern. I see. Let's see. He's coming down. Turka still going? Turka. Nat gas has just been rallying since pre-market. Yeah, there you go, 10% up. That is neat. Well done. A few of you guys are in Turka. That volume is legit. What's the catalyst on this? Oh my gosh, that volume's insane. Wait, that's weekly. That's still crazy. Jeez. Nat gas is almost back to just break even where it was. Up 7%, big earnings and extreme short interest. It's like a pre-earnings run, like AMC. SPY's coming down. See what happens at this low from yesterday. Breaks that and we're back to filling that gap. Like that level. This level here. Alright, SPY's about there. Just touch below the support. AMC, I think it's getting its pre-earnings run up. Oh, it just flushed through there. Dang, dude. One of these days, we're gonna get a big move down. I think so. Gotta get the right entry. Low float, high volume. Seems legit. See if SPY just wicks down here. I mean, it did all this from 7:30. Went 399 to now 396. 2 hours. That was yesterday's, like, I guess not the whole move, but that was a big part of yesterday, was that move. I think AMC, I don't know, it depends on the earnings, but I don't know if I'd be holding much long exposure through earnings. I'd probably take profits before it, just mitigate some risk. Green candle on it. Prime. HPCO's up 5%. We didn't get a big pre-market move on BBBY. Today, the day, we're actually going to fill that gap. 142 has been that bottom. We hit right at right now. I don't see much bid support there. We'll see. Not a whole lot on the bid side at all, actually. Fighting big down. Yeah, I think we have another leg down coming. I think we honestly could make new lows, break this low from last year, and just depends on how quick it happens. Yeah, we'll see. I think it'll probably break that, and if so, it might be the gap fill day. I want to turn off extended hours, just get rid of all that disgusting. So I shorted it here, the stop loss, and it got triggered. Came all the way up here. Maybe a good long here on the support. Lunar playing around. Squeeze for AMC. Oh, you're right. There you go. Halted to the upside. Jeez. I don't know. Yeah, maybe. Yeah, 4% already. So earnings is what, after hours today? I mean, you could keep getting a rally into it. SPY is moving up, bouncing off of that spot. GME is moving up with it. Fill the gap, Johnny. Fill the gap. Thanks for your likes, guys. We got 10 of them. Well done this early morning and end of February. Was that 10? Is that 10? I don't know. Apocalyptic start or signs of a bull? Yeah, they're starting to get some bid support in there. So 1.3, we've got 250,000 at the bid. 1.4, there's 190,000. 1.42, there's 156. So not any sell walls yet. AMC 7. Oh my gosh. Okay. Lunar got his first bracket target at 35. What? Is the investor? I can look it up. Yeah, we should have gone with the slime ball. We went with the nerd and should have gone with the slime ball. Microwave popcorn exclusively at Walmart. Is that real? It sounds like that might be real. Started Robinhood. Oh, there's AMC, new high. New high on AMC. It's real? Yep. I was gonna say, it sounds about real. Better get in before it's too late. So, let's see. 915 would be the next resistance on this thing. And if it breaks that, and 5 maybe, 11. Eyes bounced off that support pretty good. AMC is actually ripping up 11.5% already. Wow. Well over 14%. Buy. Kind of rallying here, filling the gap now to the upside. AI is up a bit. What's this thing? 6%. It's actually setting up a kind of a nice bull flag. Chart doesn't look too bad. Oh, looks like day traders are probably playing around with the AMC a bit. We'll see what happens after like 10:30 or so, 11. See what the real move is like. If there's anything left. Once the day traders get out of there. GME rejected 1940. Yeah, I saw Clove 12% now, 13%. Mm-hmm. Kind of want to get back into my GME puts, but do I actually have buying power now? The guy on chat said Stupid. Alright, I'm contacting them. So let's have buying power. Funds are supposed to be settled. Oh, they both hit the same time? Yeah. I don't know if that's enough volatility for them to be doing it because of one another. Look at this. No volume. How surprising. AMC's getting a little morning pump. We'll see. 9.5. Like I was saying, day traders in the first like hour and a half, 2 hours. You don't really know where the move's gonna go. If you're trading the first hour or two, you kind of want to be done in the first hour or two. Unless if there's a continuation, it keeps going, but flag 1 minute. I don't look at 1 minute for both flags. I don't look at 1 minute really for any kind of pattern. I'm not like trading on lightning, high speed stuff. I need 1 minute. Puts it in calls 1.5 to 1. Yeah, I mean some of the best cash secured puts are AMC's because there's so much demand for it. The 7th, it was a 5 strike and then a 6 strike offer April. So this might be part of that ape conversion or something. Carvana's on here now. SPY filled the gap. Kind of chilling here. Might look for a short if we make it back up to here. Typing high speed though. Wowza. Yeah, man. Typing is one skill that benefits you later in life from school. And that's even going away, right? Kids don't really need to learn to type anymore. They just swipe or talk. Did BY break it? SPY's ripping there. Yep, BY broke it. $1.40 it hit. So $131 from here we come. Hi Furs. GSAT moving. A bit. 9.5% on GSAT. GME is actually green right now. Where it sits. I know how to type because of EverQuest. I learned to type from Speed Racer game when Netscape was the internet. Got some DD to read you guys are sharing. I don't know why you guys always share DD and media. You don't, I guess you don't know what media is. Spies rallying. Tesla's moving up. AMC's hanging out at 7.5. Clover's at 12. Rover's at 11. BBY looks like it's about to flush. Because the DD is regurgitated media. Aha. Lunar's halted. Is it still halted? Did it resume at all? Looked at this earlier, it was halted. Oh, it's resumed. Came back. Not gonna keep going down. How does my light bulb turn on when I flip the switch? Like, really? Really, how does that happen? Thanks for your likes, guys. Got 15 of them. Well done. Give yourselves a pat on the back. Spy moving up a bit. I mean, we still have all those patterns I looked at yesterday are still in play. We've got bullish and bearish signals to me on the hourly. Longer term, it still looks bearish, so kind of weigh that way a little bit, but still could be a bounce before then. I don't think we'll have a whole lot of data today. Turco testing to gap fill. Yeah, Turco is actually pretty good call. You guys did well on that one. Yeah, 64 cents. You've got some resistance, what here, like 55 cents. SPY is wicking down now. AMC is going more, 8.5. Clover's still at 12.5%. Rover's at 8. Super League's up there. Oh. GME holding up 0.8. BBY still hasn't broken the strongest analysis signals. I have to look that up. Depends on what you're looking at, candlesticks or patterns or moving averages. I've done a little bit of research, and the patterns. I think actually Head and Shoulders was one of the higher ones as far as probability. But you can just look up probability of technical analysis or something like that. It'll tell you. Cup and handle. One of them was actually a lot lower than, like, one that people use a lot. It's actually not that consistent. Look at that wick. Holy smokes. You have AMC, would you sell? What was your plan when you bought it? Was that big print down on... Oh, on Turca? Or what are you talking about, Gilead? If you didn't have a plan when you bought it, you should probably just get out of it if you're profitable. And don't get into it without a plan next time. Get in for the squeeze hype. So that's a complete arbitrary thought. It's so subjective that it's basically just emotion. So yeah, like I was saying, morning you're gonna have day traders. It's gonna swing around. The move actually is gonna keep going. It's gonna be in the afternoon, or after day traders are done toying with it. Day traders will pump it up. They take profits, And then maybe in 30 minutes, they start buying it again, pumping it, taking profits, come back down. If it has any more pre-earnings run up, could. Earnings is after hours. What's 100% in 9 days among friends? Think about it. Think about it, man. Coming up with the chance of ape conversion or the horizon manager risk to whatever ratio level you go good with. Yeah, it's a sketchy play. It's a sketchy play. Rover have earnings? Yeah. I like the idea of Rover. Not sure how they're executing, but it's an interesting space. This looks like a nice flag. Oh shoot, I'm chatting. Okay. That gas coming back down. $142. Yeah, it did wick below there, 140. Oh no, we're below there. It's probably gonna flush. We're holding below the support. Now speed resistance. Yeah. No, I don't think we're gonna barcode here. I think we'll probably come down. I think we might get that gap. I hope we get the gap fill today. Bring it on down. SPY's coming up now. BBB with a green candle. GME with a pop-up. A little bit. Just with SPY. See if it's going to hold above 1940 today. Kind of. This is a pattern here. So we will call out the inverted hammer. Sometimes I say it's bullish. I'm like, I never see this as bullish. Inverted hammer indicates the prior downtrend is about to end, may reverse to an uptrend or more sideways. Pattern indication of financial. Upper shadow, yeah. Yeah. I suppose in a downtrend it could be a sign of a reversal, but the candle itself is bearish. I don't like to use it as a reversal. There you go, GME, look at that. Pretty big pop through 1940 there. That's such a big level on GME. Okay. Inverted hammer needs to correspond with the reversal RSI for it to signify reversal. Yeah, I think maybe like in the downtrend is more significant. That's kind of how they're showing it here. RSI is not oversold there though. I don't like how they threw that out there. Yeah, I mean this is kind of a support. Like I was saying in yesterday's recap, kind of make it or break it here on GME. I think if we break here, we'll at least come down here and maybe make new lows. If we hold here, you know, we might have a rally into earnings. I don't know the time frame on when it's going to rip, but that might be our low basically. Buys come down a little bit. thickening at these levels. Oh yeah, there you go. 234,000 bid support at $1.40. Someone saw it trigger there and put their bid there. 3 million volume on that one. A 5-minute candle. 238,000 bid on $1.30 still. No sell walls. Moving up a bit. No, I don't think GNS is dead. It's very interesting. Buy's coming down now. Oh. Yeah, I just saw you guys typing about it. Short interest is like close to 100%. I didn't look at the FTDs. There were a lot of FTDs due this week, though, I thought. But that doesn't necessarily mean we're going to get a rally. Could be the battle room selling drugs. It is for the hole or for the squeeze people in the echo chamber. Yeah, little TN GNS. Oh, okay, so it did come down. It's a smooth pattern, smooth chart though. It's just kind of aggressive, but really not too bad for how aggressive it came up. As far as TA goes, I'd look for support. You know, in this $3 range, kind of the bottoms of these bodies. It might be filling this gap down here though, and then look for support at that $2. They still have catalysts, I think, to have squeezes. The CEO is super aggressive, of course, about going after shorts, and I don't think they've had any dilution even yet, which is kind of interesting. So, so he's expecting more before he offers shares. So if you believe in that play, you believe in the CEO, then yeah, you can dip by it. Wait for it to find a bottom and catch the momentum on the way up. Go check mark by them in the Discord. Selling? A la cocaína. Talk to Ace about that. Couple weeks on BBY high short or high FTDs to cover. Just tell a lot of people what record date is. Clove, yeah, 17% on Clove. Oh, they have it available, so you can dilute whenever. So the record date for their dividend. So usually when a stock issues a dividend, common behavior would be it rallies into it, and then when the dividend comes, it'll sell off. It's not always the case, but especially with a stock that just doesn't have a dividend, it could be. Like here, even AT&T, look, had a little rally into dividend. Didn't really sell off, but especially with people like, there's people that do like dividend arbitrage type plays, where they just profit on the dividend. I don't quite understand how to do it. It's not as simple as you think. But yeah, you can kind of see it with dividend dates. But there are, of course, that's kind of the rule. There's a lot of exceptions though with dividend dates. What is it? Like AbbVie, we've seen it where it's actually rallied after the dividend, like here, which was kind of crazy. So dividend, then it rips. This is the ex-dividend date. So here's a good example. Rips into it, and then people start front running the sell-off, sells off into dividend, and continues. But GNS's dividend didn't really have much value, so it was more just, I think, to squeeze shorts. Buys bouncing a bit. GME's up 1.5%. BBBY just doesn't want to come down. Whatever. Oh, BBBY. SPY's pumping up. It didn't rally though. I know, yeah, I mean maybe all the short covering that happened before, before the last few days or whatever on the dividend. BBBY is acting a bit unusual. We'll see if it's getting just one of these pumps. So a good example of, I keep BBY up there. Rocket had a special dividend, and I think this was kind of to squeeze shorts. And you can see how it actually worked here. So this was them announcing it. They announced it at earnings. They're gonna have a special dividend. Here's the ex-dividend date. So the whole rally happened before that. So I think this was potentially naked shorts closing, mixed with momentum or whatever. And then it actually sold off into the dividend date. So the ex-dividend date didn't even matter a whole lot. Since the market's always forward-looking, it's always gonna try and be ahead. And they did it again and had a little one, much smaller, but still same rally into the dividend date. Market tries to price in the future, always, of course. If you think something's going to go up, you're going to buy it now. So then it's going to go up then. $10 NFT coupon. Yeah. I think, I mean, it was just for a short squeeze. I'm not exactly sure. That's kind of the theory, is they have to, I mean, on a normal stock with normal dividend, like cash dividend, yes, they're liable for paying the dividend. When you start doing NFT dividends or digital coupons or this, yeah, I mean, I think they are liable for it, but I'm not sure how it all works, the mechanics of it. Yeah, it was just like those other examples I showed you. It rallies when they announce it, not necessarily after the dividend, or even after the dividend date. So they want to start closing once they announce it. That's kind of the same scenario, like a buy the rumor, sell the news. GME looking, or BBY looking way too strong. Yeah, rally news of that, and then there kept becoming catalysts of it rallying from the CEO saying of all these different things they were doing. One was the dividend, and that pushed the rally even more. They they hired that company to like examine their stock or whatever, and they just look at all the data. I don't know, compile it all and say, "Yep, you've got a rat problem." Change A long-term value levels. They're at it, or are you wondering what they are? Yeah, they're at pretty good levels, no doubt. I think if we get a capitulation in the market, though, even value stocks are going to come down. So, similar to a COVID, or was that? Oh, it was a weekly chart. This is COVID, so it affects all. Pfizer, I wouldn't want that in the long term. J&J though, I like. Talk the short bounty hunter, exactly. I don't use OBV much. I look at it sometimes. BBBY, what are you doing? Share Intel, that's what it was. Looking at market flow. Uh, I think they have a pretty sophisticated formula, I'm imagining. I'm not sure what all they do. This sketchy stuff. I don't know. I don't trust Pfizer. I'm not into pharmaceuticals though. Buys moving up here. BBBY, dude. Like AMC kind of came down a little bit, just consolidating. Might still have a run after a bit. Upstart's getting its move. I know J Hart was calling this one out yesterday. I don't know what this is from, if this FTDs or what. It's just starting to show its support, so I don't know. As far as it making a move, yeah, you see how it's just flattening out here. RSI is flattening out. Now it's nice. Now it's getting to that nice, more comfortable time to be selling cash secured puts. When it's just in a heavy downtrend, it's like, whoo, a little sketchy. But we'll see. We still might come down 7-8% today. Bullish on Mullen. I'm not bullish on really any EV company. Pretty much only Tesla, if you're talking about new ones. And then some of the Chinese ones. Like BYD, Neo. Bigger ones over there. Run, Bobby, run, run. Donate to their supreme leader. So remember the other day we broke the day before high and then even the day before's high and then wicked down below it. So this is all good, showing sign of a bottom. So doesn't mean we'll just rip. Could consolidate for who knows how long before we actually get an upward move. Still a $250,000 buy at $1.40. Not many really sell walls. Starting to show up a little bit. 155, 153. It keeps rallying, you're going to start seeing more sell walls, but yeah, AMC does have a bit of a bull flag on the 5-minute or so. Coinbase is up 6.8%. Gotta look at UNG. I don't know if it's gonna get down to my target price to pick up more. I might have to buy one here. Yeah, I'll wait. I have an order for about here on another contract. Maybe raise it a little bit. Buy's coming down a little bit here. Oh. Just a VWAP on SPY. BBBY getting shut down a bit. Pretty good volume this morning on it though, with this pump. That's 16 million. See what the next 20 minutes brings. I don't know a whole lot about MMTLP. From my brief understanding of it, it sucks. It's too bad. SPY coming down, and it seems like that would be the fate, something similar, or could be the fate of something similar, of even a GME or BBBY, if it really push came to shove with those, where you're just fighting Wall Street basically, and it just ends up, I don't know, in court. So, yep, there's the shutdown on BBBY. Eyes through VWAP. There you go, just like that. BBBY is down 3.5% now. There's probably still stuff going on in court for it for sure. It was kind of fast. I mean, we've seen this most days on Bed Bath, where it will have a rip and then it just sells off. Sometimes pre-market, sometimes end of day, sometimes beginning of day. It's just volatile. Ton of volume being traded. Like, AMC looks like it's about to break out for more ups. Got resistance. Wake up here at 916. So little tiny gap there at 971. GME is just kind of coming down with SPY. We can get this gap fill. This gap fill done today. Oh, AMC double digits. Yeah, might. We've got your time frame for it though is the next what, 6 hours or so? Because after that, yeah, it might go up more, but it's much more risky to hold. But it could hit double digits before then, sure. You still have day traders in it. It's 10:15, but the fact that it's holding up here is pretty bullish looking. Bonuses are better than holding shares in your company's garbage. That is true. So I've got cover calls on hood. I don't know why they haven't lost value. Held up pretty well actually. Oh, never mind. Yeah, that's why I got them close to the money, because it's bearish looking. Buys below VWAP now. Corsair's held up pretty good. Haven't really seen a flush yet. Oh, Tesla's red. Never know when the profit taking will come before the selling the news. People like to front run. New mint soap. Flies coming down here a bit. Sell the day of the obligations. Yeah, maybe. Could be what that little pump was, and is every day. Got a big bid at $1.40. See if that gets filled. Might be a spoof order too. Based on AMC, above is happening to be at least 40. Yeah, I'd agree with that. AMC definitely could rally after earnings. Absolutely. Globe's holding up pretty nice. Oh yeah, I was chatting. I'm gonna read what they said. I might add to my Tesla short. Profit takers seem to be coming in already. Oh, I can't though. Dude. Tesla's down 1%. We have a divergence on the MACD also. Bed Bath back at that 140 test. 341,000 now on the bid there. Next after that's 130, which would be gap fill. Get enough shares to vote in the conversion. What do you mean by that? How does this run give them shares? You can't rely too heavily on the information you get as far as borrowable shares and but I mean we see this almost every day on BBBY, whether it's pre-market, during the day, or end of day. All right. The judges always go against Wall Street. And then the judges stab themselves in the back. That actually might be possible. They drive off a bridge with perfectly working brakes. Thanks for your likes, guys. About an hour in. Got 23 of them. Well done. GME's volume is off, but still possibilities that it holds this support. What happened to BBY? What do you mean? Hey, Jan. Cesar. Yeah. Yeah, Adam Aaron. Smart. He wanted to make money and he made money. He played it right for himself. Rover holding up nice. AMC. About to move, maybe. I probably would get a debit spread on AMC, but I don't have any buying power. Still. Up and down immediately. This is the same BBBY that does this every day, Jan. You're wondering what happened? Friends with Kramer. Yeah, you could day trade it really. Usually get those after hours moves. You know, you get 3-4% even from the low of the day. Been pretty much like clockwork. You know, this was yesterday's low. It starts barcoding. Did sell off, but then you got a better exit up here. Day before, it sold off lower than the barcode, so would have had kind of a high entry here. But look at that. Extended hours, got a bump. And of course this, here's the barcode. Even if you got it here at that pump. You definitely ride that train. AMC coming to test VWAP. VWAP's very high on it though. It's a still a nice pull flag. This is an RSI divergence, but that's a 5-minute. Not necessarily too much weight on that. It's kind of hard. If that was your goal and your plan, you had a plan, then you do it. Be too crazy. AMC does have a bull flag on the 5-minute. See, here's the pull, here's the flag. Revlon's up 7%. Clove almost 15. 367 now at $1.40 on BBY on the bid. You see that? I could pop that out. MC. Full volume on GME. $352,000 there. Nautilus is up 6 1/4. Utu. Utu's up 4.5. US Chicago PMI came out at 945. Didn't have much of a move on that. Actual was 43.6 versus 44.3. Estimates was 45.5, so it came in lower than estimates. Consumer confidence. Fed might raise policy rates to 6%, Bank of America says. US Richmond Manufacturing Index was -16. Estimates were -6. Consumer confidence 102.9 versus January is 106. Nearly 30% of the new cars at a budget price is from households with annual income of more than 150,000, up 22% in 2016. The amount of time it would take to save enough to put 10% down on a typical home in Austin rose from 8 years in 2019 to 13 years in 2022. Buys coming down there. We have data coming out. Bid at $1.40 still there. GameStop is kind of at that support, so if SPY flushes, maybe it would. All right, data came out. Maybe it's not out yet. I like monies. Yeah, everybody like money. I like money. Well, not seeing it yet. Here's a write-up on BBY. Conclusive proof of no dilution. Nasdaq must be notified within 10 days of less than 5% increase in outstanding shares, and that hasn't happened. This is what DL D'Amico was talking about on Discord. Guidelines used to notify NASDAQ of any change in outstanding shares in this form state the following. The company must notify NASDAQ when there is an aggregate increase or decrease of any class of securities that exceeds 5% of the amount of the securities of the class outstanding as last reported. The form is required to be filed no later than 10 days after this occurrence. So either it didn't happen, or they're late, or they're just not going to file. Moreover, as I explained, or it's less than 5%. Explained in my earlier post, the company will need to file new prospective settlement specifying the underwater for any common shares issued. As the prospectus supplement filed so far doesn't specify any underwater for common shares. All this is conclusive proof that no dilution has occurred yet, and the current price suppression is intended to let the negative shorts cover millions of their FTDs by their upcoming closeout due dates, as close to the price they were sold at as possible. Just crossed 30 minutes ago. GME just hanging out there. Now the other thing. What else do we have? Oh, a chart of the FTDs. There's the BBY chart of the FTDs. So back in the run in August, you can see the amount and compared to now. And that was just showing up to February 14th, so we haven't gotten the last couple weeks here. Where I get my weed from. Whoa, AMC came down. Let's see, is it breaking VWAP? Yeah, it did. We'll see. Still at the top. It's still in the bull flag if it can bounce here. Just at the support of the bull flag at this point. But MACD flipped through VWAP. The screenshot the short interest on BBBY. Settlement date. This is so lagging. Morningstar reporting Bed Bath & Beyond short interest now less than 1% from exceeding total float. After NASDAQ released February 15 settlement numbers yesterday. Whoa. $99.85%. Yeah, that is old. It's all very lagging. So are you guys overseas not been able to buy? I've seen this post a few times. Trading on this market not available now. I don't know if there's an explanation or if it's normal for some reason. Billionaire investor Leon Cooperman expects the S&P 500 to plunge 22% and the US economy to slump into recession. GME is break even. Vulcan's up 6.5. I don't see AMC up here anymore. Did it flush? Yeah, it's breaking that bull flag now. Overseas broker or flaky? GTII is up 13.5. Oh, had a spike there. Coinbase up almost 7%. XBAV looks good. Party City's bankrupt. Fly's just been chopping today, just staying flat. BBBY. I think we'll get a flush today. It has hit that dollar, or no, $1.40 is below the level. So yeah, it's consolidating below the support. So I imagine it's gonna keep coming down. See how these are getting eaten up too? That was 300,000. Now it's down to 183,000. Oh, it just got filled. You see that wick down there? Now it's gone. There's our flush. Next buy wall is 135. Yeah, now that bid level's gone. That buyer got their shares. Highs coming up here. Could have been a spoof order for sure. I wasn't looking at the time in sales. There was a pretty big one at 140. 49,000. It could have gotten filled. 15,000. Yeah, there were some big fills in there. $135 is the next bid support, and then 130 getting that gap fill. It's happening. There it is. There's the flush.
Comparisons because of the pandemic and the draw out from the pandemic, it's kind of tough to see where the company will sustainably be when it comes to sales and earnings.
The flush look is only bounced.
But
what about consolidate?
We're still seeing the risk reward as more balanced at the current levels for Dick's Sporting Goods.
Okay. I'll tell you what, from the last time I went there, it didn't seem like they had too many inventory problems. I guess they had plenty of clothes. Shoes, nothing.
No.
That was amazing. I never seen it like that. It was like they had like 3 pairs of shoes. It was crazy.
What do you mostly, get boots for hunting? It's like,
they got all kinds. They used to have everything. They used to even have a little track. Remember, in Dick's, you go and you could try on the shoes.
Okay.
Not anymore though. All right, at least not the one I went to. However, at least as far as downgrades go, it's not the worst. I mean, they're basically just saying
It's
the
coming
party's
down a
maybe
bit here. It's under
on a
VWAP
hold now. They had it at the buy. They were right on that, this analyst. So now they're saying if you missed it, sorry, it's not really going anywhere after this.
I can see that because the party has been kind of a rager, to
Below
be honest with you. We've
yesterday's
more than
low,
doubled since
aren't we?
our yearly intraday lows that happened with the May earnings
No, I
event
guess
back
not
there.
quite.
And since then, we, in the more recent term, prices in sort of a mild rising wedge type pattern here. Very, very mild, with the top line being a very slightly shallower slope than the bottom line here. We also passed above these old highs here near about 129, 130 into those yearly highs. Since then, we've been bouncing around our yellow 21-day exponential moving average and those old highs as well. It looked like we were perhaps going to give them up today and start moving to the downside, but the market doesn't seem to think this news is as bad as it perhaps seemed at first. We clawed our way back above the 21-day EMA and that old support. So looking at RSI, our momentum is was below that 50 midline very briefly. We're back above that point now, so we're back in the hands of the bulls here. And in terms of support and resistance, a couple areas caught my eye. The first was
now bouncing
around 124, right about here, because that's roughly where
really
we
just
got
hang
our
around
linear
VWAP.
regression line, our line of best fit based on closing prices, coming in confluence with our orange 63-day EMA. So you want to look for where these indicators line up. The more indicators are lining up at the same level, the greater weight that price level has. And we used our linear regression line then to draw standard deviation channels. Those are these straight lines going above and below that linear regression line. They're simply just +1, +2, -1.
Oh, is that one of your
standard
is that one of your buys?
Our price
Or your limit orders? Do you still have those?
+1 standard deviation. So that seems like that could have been perhaps the thinking for where
Being
they
here,
thought
I think
prices might top out in this
the gap
game.
is going to continue to
All
get
right,
filled.
Uptrend still generally
Once we started
holding,
consolidating
maybe
below our
kinda
support,
on its way towards
seems
some
like
of that
most likely to keep coming down.
resistance ahead, but
So it started to fill the
right in the
gap.
middle of the channel.
131 is the end
we
of it,
certainly
though.
have seen worse responses to bulls basically backing out of their position. That's pretty much what we got
127
here.
is that
Want to keep in mind the pretty good chart
low.
from Dick still. Okay, let's talk the bad chart. Dish, one of the worst ones here over the last year, Renita, and another downgrade here from an analyst. What's the story?
Double downgrade over at Dish from Bank of America. It's to underperform from a buy. Took the price target to $10 a share from $30 a share. And this note is all about
coming down
5G.
some more.
How long have we been hearing about
Long
5G
time.
network? It's
GME
been a
showing
long
some
time. It's been
relative
at least a
strength.
decade. We know that 4G premiered back in 2009. And
Interesting.
so right now, this analyst is saying that this run up to 5G, it's not going to come as soon as the company is saying that it might come. And so they say that today, Bank of America is saying that the
coming
opportunities
down.
to leverage that 5G
Little bit.
wireless network infrastructure
Little bigger
now
than a
feels
little bit.
further and further away. And analysts are expecting declining EBITDA for Dish to adverse pay to TV trends and higher marketing expenses, also inflationary pressures. A lot of the same things that are beating down its peers. And then Bank of America says the company's free cash flow trends are increasingly negative, and they've been so for the past, or they will be so for
And
the
maybe
next 2
bouncing
years.
that
So that's
support.
going to be an area that we watch when earnings come out.
All right.
GME is
looks
looking
like bad stuff.
mighty
So there's the double downgrade.
strong.
Last one was just a downgrade. Here's the double downgrade. I misspoke on that. A big
gas kinda
cut.
double
I
bottoming
mean,
on the 5
seems
minute.
like this is like an admission of a huge error on the calculus of what 5G means for this company. And I mean,
Thanks for your likes, guys. We got
Stock's
24 of
trading
them.
at
Appreciate it.
$11.30, so not too far off from their $10 after this sell-off. But I guess to see that type of bearish note kind of shocked the market even at these levels. Because, I mean, we're down 90 cents on this, so we were above 12 bucks last
just
night.
made a wick
I
there.
think I'm more surprised someone had a buy on this thing to begin with, to be honest with you. I mean, we're down 66% off our yearly highs, and it hasn't been a
25, thank you.
fun ride downward for the bulls here. We did have that big initial decline. Then it's been kind of a sideways to downward grind for a lot of this here. We've had this downward sloping trend line. But right here was a key point that we failed at. We failed at our moving averages, our yellow 21-day, our orange 63-day, and the volume profile point of control right near around 1430. So that was where we kind of needed to break above
Yeah,
to
AMC
get
kinda
some,
broke that
some
bull
hope
flag.
of a bullish
See what happens in
move
the
here.
afternoon. Maybe
we
we'll come
failed
back.
pretty resoundingly there. We were
Carvana's up
dropping below the value
4.5%.
area, the area where 70% of the trading has taken place, demarcated by these two
My
thick
cash
yellow
secured
lines.
puts would've worked on this one.
RSI trending lower, almost in the bearish territory of the oversold mark now, but the momentum is in the hands of the bears here. Once again, I decided to throw up a linear regression line, a line of best fit,
That one?
because I
135
was having some trouble seeing where
bid
maybe this
support is
$10 price
building
target
up.
was coming from. And that roughly lines up with
1380
some
has
lows from
108,
2009, but that was such a
109,000
long
right
time
here.
ago. But,
Wow.
but the linear regression line, sure enough,
35
came in
would be the
right
next
around that $10 mark. That
level,
could be the
and then
thinking behind
130.
where they got that number from. So that's a potentially interesting point to keep an eye on for some support there.
All right. Rough days for Dish Network. I wonder what comes next.
I think so, Jan. I think we'll finally get our gap fill.
Something's going to
Hopeful, at
happen here,
least.
though. In a total free fall like this, something
I
existential
might sell a few
usually
more
comes
cash
about,
secured puts down there if we
for
do.
a stock like selling off the way Dish is after earnings, too. All right. The double downgrade, painful move there. Thanks, Renita. Thanks, Rick, for the charts. Let's go to Caroline Woods, the New York Stock Exchange. Let's keep talking some company news, a developing story in the ride-hailing world of Waymo.
Near the lows now.
Hey, Caroline, what's up?
Hi,
Got
Oliver.
redder than
well,
moving
Waymo,
average.
of course,
Actually,
is
might be flipping
Alphabet's
bearish, too.
self-driving unit, and it's one step closer to launching a driverless commercial ride service in Los Angeles.
In
It's
131.
pulling the human safety drivers out of its robo-taxi fleet
change
in
it.
LA. The
Change order.
co-CEO, Dmitry Dolgov of Waymo, tweeted yesterday, following a rigorous cycle of validation and safety readiness evaluation, Waymo is starting fully autonomous, no human driver testing in LA. Now, TechCrunch is reporting that it will begin testing those Jaguar I-Paces in the next couple of weeks. To start, only employees will be able to hail driverless rides. They'll only be operating in Santa Monica at first, though they've been testing in other LA neighborhoods as well. So the plan is to start there and then branch out. And service will only be available outside of traditional rush hour times. So
Yeah, you guys were saying San Francisco, that's the main one
times.
that's
So
cruising around driverless
Waymo
that
is
people are using.
already operating for
Such a
select
mess.
riders in San Francisco and in Phoenix. There's some airport rides available, but in LA,
Spies at the
we'll
low
still need
now.
some more permits
Or at that
before
support
it can
at least.
actually begin a proper
Not quite the
commercial
low of the day.
robo-taxi service, so there could be more testing and deployment necessary, but seems like a step in the right direction. As you can see here, Alphabet shares modestly higher today, up about 0.2%. Not really sure if it's this story that's driving shares, but it's just interesting, and we're getting closer to
There's
driverless
BBY.
taxis, which
Nope.
we talk quite about.
Oh, I thought you were going to
Quite
say.
a bit about, I should say.
I thought you were going to say we're
Think the
getting one step
138
closer to
bids got
total
bought up.
recall, because technically that was
Right.
the movie that put this on our, in our future. All right. Oh, so the robo taxis, NSF.
Oliver, you just know me too well.
I know you're a big Total Recall
I
girl.
should have given the Total Recall comment.
It doesn't seem like they've got a big testing, pool yet. Just employees, just SF. I mean, the car looks pretty sweet.
Yeah, you got to start somewhere, but it definitely seems like, baby steps. But I've never actually seen one on the road because I haven't been to San Francisco in a while. I don't know. It seems cool. I think it still would definitely startle me to see a car with no driver. But
Penny
hey,
share
maybe
loss.
we'll get used to it someday.
Hey, some of the Uber drivers that I've had.
Yeah, when
are
that-
so,
when Friday wasn't
glued to that
engulfing,
GPS without
by the end of the day, I
their
was less
eyes
bullish on
actually
it.
looking at the addresses and figuring out what the heck is
So,
going on. That they
I
might
still
well
have
be a
exposure
robot
from it, but
anyway, so,
it's all cash good
we'll
puts at
see
this
if there's
point, no
much of a
shares.
difference. All right, thanks, Caroline, for the update.
And we'll probably get more of
Waymo
those
getting closer to the
Just level down here.
robo taxi world of Total Recall.
And if we get a lower low,
again.
then we
What's
could
up,
be
Dan
getting
Grant,
a
in
RSI
studio here with
divergence.
me. Michael McCurr
Be
joining us
bullish.
on the line with a
I
fresh
bounced
cut.
out of there.
Mike, how about the cut to the market's bullish momentum here?
You
the
can cancel
last
it or just
couple
modify
weeks?
it. You should be able to modify it, Ace. Change the
Yeah, I
price.
noticed you got some new spectacles as well. So
The better
good thing
to
we're
see
both
you
supporting
with.
the services economy and fueling inflation further. I think that the move that we've seen in equities recently, it largely is an unwinding of the overbought momentum that was created by the breath thrust, which actually has been so far 6 weeks post that event triggering one of the least impressive breath thrusts that we've ever had, going back to at least 1945.
Wait,
So
we already
either we've
determined
got
that?
an incredible opportunity.
I thought we had to
Go
give
ahead,
this thing
Albert, what
time
were
to
you
play
gonna say?
out.
You do. I'm just saying, from a post-trigger to 6 weeks, historically, this is one of the worst historical returns after a Whaley
Maybe a
breath
long
thrust
here on this bounce
that
now.
we have seen. So either that means
Double
this
bottom.
is one of those 30 that might not play out, or
Keep finding
it's
good
an
long, I don't
opportunity
find a
for
good
the
short.
long-term bulls potentially to step in. And I think you're starting to see that support come into the S&P 500 at the right levels. I'd say it's a little bit sour that we broke back below 4,100, which was that breakout inflection point. And now we're testing that uptrend resistance line. But I'd say the important support range is going to be between 39.20 and 39.40, which is the 100 and 200-day moving average. And so far, those have held. All the while, rates have continued to push higher. But I do believe from a technical and fundamental standpoint, those could be facing some headwinds here, which could give equities some relief.
All right, so the Whaley Brett thrust, not exactly living up to expectations so far, but still time. Dan Grant, we blame bonds on this?
Absolutely. 16-year high, 2-year note. Curve is well inverted. Fed is well ahead of the curve. 1-year T-bills are above 5%. 6 month is showing right around, it's 5.12 right now.
Okay.
We had some big misses today, but the stocks are climbing the wall of worry, right? So we've put in another rate hike between three total rate hikes between now and October. One in March.
Gotta
one
live,
in,
man.
2 more by October. So one by August and at least one by October.
Boy, that seems like a slow relaxed pace, does it not?
It does, and we've
25 each?
And we've talked about that before. We've pushed so far the most aggressive rate hikes we've seen in generations.
And financial conditions as of February 1st were the loosest in a year.
Yeah, things are starting to loosen up, and I don't know that the S&P should stay here.
Speaking of things not living up to expectations,
double bottom might be playing
bred
out.
Thrust and the fastest rate hikes in history. I mean, financial conditions loosest in a year coming into this month. That's why folks were so surprised that Powell wasn't more hawkish. So, I mean, it seems like by that logic then, Mike, loose financial conditions, stock market that's generally just still pretty well bid for the most part, hasn't totally reversed down. Is there not more room in that timeline between here and October to throw on another 25 bips or make one of them 50?
It's possible if the data gets hotter from an inflation standpoint, but it could go the other way just as easily. The Fed is not going to
GME is moving
alter
up here a bit with it.
its primary focus, I think, until they see a meaningful change or acceleration to the downside in the data.
It'll probably give you another chance.
And it's certainly possible that, you know, the inflation
drop lower most likely to 130.
is not going away. I know it's going to be a long and bumpy
end of day
road.
or after hours, you very well
and
get a spike back
as
up
quickly
to,
as I think the market and the Fed would like to see, but it is still happening. Growth is starting to slow. You're seeing
showing that
today.
we're getting closer to a bottom,
which is why the Fed is not,
at least that's what it looks like,
jumping ahead of itself to pause the rate hikes. But also the hawkishness recently has come from non-voters.
Yeah.
So yeah, be careful of what you hear the Fed say rather than what they're doing. And those that actually control the decision-making process are not the ones screaming with hawkishness. And I don't think the Fed has as much impetus this year as they did last year to raise rates as aggressively. So I'm feeling a bit of a contrarian play from myself, thinking we're closer to the end. And that's why, frankly, I think the dollar and rates have headwinds coming because those short-term interest rate differentials are starting to narrow between here in Europe.
All right. Well, we do have a central bank week that seemingly is a little bit more about the rest of the world than us. Dan Grant, Michael McCurr, thanks, guys. Trading 360 is up next.
3. Oh, well. Yep, AMC broke that bull flag. There's the bounce on SPY. Back up to VWAP. So far, not any great setups, just flat more or less. Double bottom could have played, but my longer term is bearish, so a little sketched out. Short bumps. On SPY, I think we can move up to, I don't know, see how it goes, but next resistance really, if you break the high of the day, would be this 399.31. Are you talking about on BBBY? GME's moving up to VWAP. SPY's grinding up here. I'm late, but I'm gonna send it. Double bottom is confirmed. Just basically at VWAP now though, so we'll see. Nice, Tarek. Well done. 2.3 euros. Good one. All right, SPY's getting pretty bouncy here. GME's above VWAP now. Lord of the Rings money. Kind of want to put a stop, but it's maybe too close. MACD flip back bullish. I've got green over the 9. There we go. Now let's get some push. So the 138 bids, looks like those got filled or something. They're not there. Now it's 135 is the next support. 130. There's GME's move with SPY. AMC is also kind of moving with it and bounced off that 50 moving average. BBAI. I've seen it mentioned. What was this was the high short interest one, or what was the catalyst on this one? I can't remember. Put my stop loss on this future contract I got. It might get filled. I got a pretty poor entry. Way late. Yeah, I'm not seeing any sort of reversal yet on here. $240 kind of a support, and then 75. It holds there. No, 153 is fine. I mean, long term on the company, fundamentally, like, definitely undervalued. It's not going bankrupt, and if it's here in 5 years, it's not going to be this cheap. If it's here in a year, it's not going to be this cheap. And I think it'll probably be here for at least a couple quarters, at the very least.
Also said they are very focused now on taking deliberate and strategic actions to best position the company for the next chapter, while they continue to pursue
I'll probably
all
take profits on
opportunities
this
to capitalize
on my
the
long
healthy demand
ES
they're experiencing,
here.
especially during this critical wave season.
But we'll see. Maybe we'll get a gap fill or something before more downs.
Quarter in terms of occupancy,
This would be a nice
and they
move.
did say that a lot of these actions they have taken to reduce some of their costs have not yet materialized, so it will be a more longer-term story there. But occupancy is expected to average about 100% in the first quarter, and they expect to reach historical occupancy levels in their second quarter. So they do see bright horizons, not enough to lift the stock. And I think clearly this company's cash and some of its balance sheet issues are overshadowing anything positive within the report, Nicole.
Yeah, thank you very much. Good to see you. Jenny Horn, much appreciated, markets correspondent here on the TD Ameritrade Network. Let's get some insights in the news shaping the markets, and for that we welcome in Rob Fleming, senior market analyst with the Schwab Center for Financial Research. We're wrapping up a month
BBBY
here
bouncing a
of
bit.
down arrows. What do you think is driving this? Is it the data that's coming in stronger than expected, and meaning that the Fed's going to keep raising
Tesla
rates?
down 1%.
Yeah, well, good morning, Nicole. Thanks for having me on. Yeah, I think the rise in rates and the Fed expectations have been tweaked a little bit given the rhetoric we've seen and the data that you mentioned.
Yeah, on BBY,
inflation and tight
absolutely
labor
below
market
4 is a
data
good entry.
has seemed to
Depends on your plan and
increased
plan with it,
expectations that the Fed's going to be
Yeah, I mean, just look at the
either
chart.
going
Market cap-wise,
staying
it's
more aggressive with their
about the cheapest
monetary
it's been
policy, and then
since the
also
night- since
throwing
that
a
IPO,
kind of a
more or
wet
less.
blanket on the second half expectation that maybe there's a possible rate cut in the future. So I think that's why the markets are giving back some of their strong start to the year.
And so really the idea of rate cut has been pushed so far out. Tell me about some of the specific data that has been jumping out at you.
Yeah, I mean the inflation data.
135,
we saw
that
the
bid is
consumer
increasing now. It's
and
200,000
producer
there.
Price indexes both come in a little bit better or more than expected. But last week we also saw the Fed's favored gauge, the PCE price index, also come in above expectations. So I think that's that the inflation data that hasn't come down quite as bit. It has decelerated. You can definitely see signs of that, but it hasn't come down as
Very
much
mellow
as I
day
think
on
the
SPY
Fed
so
would
far.
want to see. And then you also couple it with
All the
tight
action was
labor
pre-market.
market statistics we're seeing. Jobless claims remained under 200,000, and then we saw that
Might
last
get a move back
last
up there,
month's
though.
labor report come in well above expectations. So I think that's
Got Europe
keeping
closing in,
the
what, 20
markets on
minutes?
edge a little bit about how aggressive the Fed's
push
going to
our rally.
remain and potentially how long they'll keep rates higher at their terminal rate, whichever they determine that as.
And that's the whole thing. I mean, you don't want to have inflation entrenched into the economy, and that's one of the sticking points, is that they need to act quickly. And there's a lot of folks who think they should just go for it and do the 50 basis points on March 22nd, right? Are you also hearing that?
He's coming back down a
Yeah,
bit.
I'm definitely hearing talk about that, them doing it, but it doesn't seem like
Mara's
from
up 7%.
the comments
Crypto
that we've
rally.
seen from Fed officials that that's the consensus. But we'll see. It'll be interesting to
Nat
see
gas
in
making a
the
new
March
low.
decision, because that'll be accompanied by their
Still pretty far
updated
ways off
summary
of
of
my buy
economic
order.
projections, so that you will get a good sense of where the Fed's at in terms of not only inflation, unemployment rate, but also their ultimate maximum terminal rate for the Fed funds target.
I know you're watching jobs going forward. Tell me about a few things that are on your radar.
Yeah, well, this week we got a few reports. We had today the consumer confidence that was a big miss there, mainly due to expectations, and you can see the Conference Board's consumer sentiment index is geared a little bit skewed more towards the labor market conditions, but you can see that looking at diving into the report, you can see consumers were a little bit cautious about what they're going to spend on big ticket items like homes, cars, moving forward. So you can see a little bit of cautious in the expectations 12 months ahead here on how their spending habits
continuing
will
its
be.
climb.
And then we'll see tomorrow. We get the ISM
If we can break this
manufacturing index.
high on the day.
It's expected to be below that key 50 level, which is the demarcation point between expansion and contraction. For I believe
Yeah,
the
car
fourth
prices
straight
already have
month. So
come down.
We'll be looking at that, diving into
In a lot of areas,
the
I think.
components there, such as new orders.
But
which
yeah,
is
we're
a key
entering
component.
Carmageddon, man.
The prices
Cars
paid
should come down a lot.
inflation component, employment.
They've
So looking at that, and then also we'll get jobless
the
claims, which I
auctions
mentioned.
and the
One of the more timelier
used car
reads
lots and
on
all
the
those have
labor
been
market.
they've been
That'll be for the
hoarding all
weekend
these
in
cars
February
to try and
24th. And then
slow
we'll
down
also look at the
the
ISM services
depreciation
index
on the value.
Friday, which has
So,
maintained a level
but they
above
have
that
a
50
huge surplus of
mark,
cars they
which
need
is
to unload.
a sign of continued
They're trying to
expansion.
slowly release it into
But
the
it was
market to not upset
interesting
the
to see
pricing
in
too much.
today's consumer confidence report that
But yeah,
some
the
consumers
depreciation
had
on cars
mentioned they may
is back, and it's
be
going to be
scaling
probably
back
the
some
fastest thing we've ever
plans
seen.
for traveling or spending on services as well.
Yeah, without a doubt. We'll be watching all of that. Thanks for the setup, Rob.
Yeah, I would wait.
Next
I would
is
definitely
Citi,
wait.
Senior market analyst with the Schwab Center.
Used or
Financial
new, but
Research. Thank you.
probably especially used.
Plenty more to come right here on Trading 360. Our 360 Spotlight. We'll talk to the CEO and co-founder of Terran Orbital, the satellite company's after being
All right, nat gas is now moving down. Oh, you tough guy. $398,675. Wait, 248 is my buy order. 48. Yeah, I like that. Might buy two. Yeah, I'd say, I mean, cars naturally depreciate, so, but I think it's going to be accelerated. So, oh, there's a big flush on that gas. Yeah, I would wait as long as you can. Cash for clunker. Yeah, that was just their stimulus. Like, not what we need. Another pump of money put on the backs of taxpayers. Yeah, just get another used car with a CD player. What is a CD? Clove, staying strong, sort of. GTAI moving again. Flash drive. Yeah, I mean, just stick with old cars. I mean, they should get cheap. There are some cars that increase in value. That's true. I don't know about a 70s Monte Carlo, but SPY's kind of rejecting a new high here. I don't have a player. You get one for your house. You can always change a stereo in a car with the CD player. Take out the big TV they have in them and put in a CD player. Could just get like a Walkman, CD player Walkman, some fuzzy headphones. Just listen to that in the car. Now SPY's consolidating, maybe bull flagging.
over 20% growth in their sector. They're a dominator. We also see that this stock is going to see some resistant points probably in the next month or so, but as far as the year is out, I wouldn't be surprised if this is over 12% in the next 18 months.
Wow, that would be great. That's as long as the infrastructure story does not change. Ben Lichtenstein, a look there at Caterpillar, please.
Well, this is a stock that's done well, Nicole, and price activity a reflection of what Achilles was speaking to in terms of some of the fundamentals from October around 166 all the way up to 266 to begin the year. You can see how we've kind of lost some of the momentum as of recent, but really no rejection of this upper level, just kind of sideways consolidation. As I look at this chart, I can see two things. You've got
CDs
the
do skip,
very
that's true.
well-defined transition from that vertical to the horizontal phase, and the reason we look for this is because once you stack up those horizontal phases, you start to see migration of value. In this instance, to the upside, 165, 180. Just looking at these areas where the market paused, 215, 230, and currently you can see how well we've been forming balance around this 252 area. So again, holding this upper level just off the highs of 266.
track with Spotify.
The lows from this month around that 235.
All right,
area,
Spy's
just
breaking
below
out here.
240. But let's move away from this intraday. Look at price activity. The
GME's up
hourly,
1%, no
I'm sorry,
volume.
candles. And I want to point out that, well, the bull
BBBY
trend that
being
we're seeing
stubborn.
here since the beginning of October,
Coming
end of
down to
September,
130.
this actually comes into play from off the pandemic lows. You're seeing 87.50 all the way up to 266. So even in this time frame, you can see those two well-defined areas of consolidation, the phase, this really high conviction phase off the pandemic lows where we break out up and through that $200 level, and then again, for the most part, sideways in this larger range that's been forming. So you've got high conviction to the upside, a couple areas of balance, but really since posting that high up around 266, you can also see how we've just been kind of consolidating around and in between 260, above 160, but holding the upper extreme of this range, right? The bulls don't want to see it through the middle. We always talk about that's a significant area right now in terms of that pivot, but I wanted to take a step back here. Let me just show you what's going on with CAT.
You can own MP3s and just play those
the 200 flatline here for the
digitally.
most part, but starting to slowly inch up. And,
Yeah,
and
I don't
that's
really listen to
encouraging
music in
for
the car
bulls.
anymore.
Just below
I haven't
the
for
50-day
years,
moving
actually.
average,
It's weird.
RSI has been leaking a bit to the downside, but with this longer-term trend playing out here, again, giving the benefit of the doubt to the bulls here, holding
gas
up
is
above the pivotal area
accelerating
on
its
the daily
downside move.
time frame. So I think the price activity we're seeing is kind of shaping up to what Achilles was talking
Profit
about. Even with the
taking has
broader markets
commenced.
holding firm, potentially for a breakout
Got
to the
1,000 on
upside
my
here in the coming
contracts.
weeks and months.
They could have sold and
Interesting. I will
rebought,
say
but
that the analyst over
like a
at
punch card.
Baird, who
Want
was
to try and time the market as
notoriously
little as
bullish,
possible.
he'd been
So
on that
I'm just
one,
going to average in
with an
as it comes down.
outperform rating for 3 years. He actually, Achilles, recently in beginning of February downgraded that stock to a neutral just because of the outperformance and saw some near-term downside. As you noted, you may have a pullback and then a move higher.
Yeah, absolutely. We're going to see that rollback. We're going to see that resistance points being hit.
It's going to hit
But
forever.
From that point, we're going to see it break through probably a little more towards third quarter this year, and then really start to move to the upside fourth quarter. Also, we also have to take into consideration if a recession starts rearing its ugly head, then that's going to change the game just a bit. But for long-term prospects, Caterpillar looks pretty good.
How long, if we have a recession, how long do you think it will last? Are you in the deep recession category? Are you in the mild and quick recession category?
I'm not in the business of being in a long-term recession person.
Right.
As a wealth manager, we want to be in the short-term camp. We're thinking 3 to 6 months tops, negative
If it
growth.
happens.
If it happens.
Do you think it's
Just
even
give
gonna
it
happen?
time.
Yeah.
All right.
It's consolidating below the lows, so
this one had a high recently
probably going to still
at
flush.
53 it looks like, but year to date still a winner.
Yeah, Illinois Tool Works is one of these stocks. It's not
You know,
sexy,
that's
but
support's
it is a
gone, so.
consistent performer. It's one of these things. They have good operating margins. They have good consensus estimates.
grinding up.
And the stock has done okay.
I say that about nat gas,
relative
but
to its peers. I say okay.
Of course,
because
looking at
of
it now, I'm
recent
like, I should have
pullback.
sold there and shorted
But
it.
we're going to see
I
some
could have done it. I knew it was
resistance
coming.
near term, just like other stocks in the other sectors. And at the same time, we're going to see some nice growth but only 7 to maybe 8% in an 18-month time frame. So
all right,
a little
SPY's
bit more
moving up here.
conservative, but I believe
Last 5
that
minute
the
candle
stock
did make a new
does have
high.
some excellent potential.
Got a little
moving
ways to go
forward
for
and
that
can be a
pre-market
core
highs hit.
holding in good portfolios.
Right, right. And look, it must be really hard
GME's
to
moving
try
up a
and
bit.
pick winners. They're going to go, more than 10% higher at this point. It's not an easy market. Ben, Illinois Tool Works.
Nicole, I'm not surprised to hear a very similar sentiment from Achilles in terms of what he just pointed out and some of the reasons why he likes CAT, because structurally this stock's in a very similar situation. Well-defined trend up. We're talking end of October. We were around 188, rallied all the way up to 253 to begin the year, but again, kind of sideways since. But as I look at this chart, again, I went ahead and just identified some of these areas of consolidation that have formed on the way up, so we can determine, again, that migration of value. And in this instance, you can see it's to the upside, right? Zero rejection of this, holding above a key level 225 right now. If we were to break that down, we'd sort of lose that working assumption that we're establishing areas of value to the upside. The bulls want to see something up and through this 240 level right now to sort of solidify that working assumption. But taking a step back, and as I look here at what's going on in terms of the daily time frame, you can see, again, it's not just since October
getting a little
that this
poppy
stock's
with the
been rallying
SPY.
and doing very well, much like CAT. We've got, well, in this instance, I just went ahead and wanted to draw your attention to this wide range consolidation. Again, around 220 is forming, and this goes all the way back to, well, off the pandemic lows. We saw that high conviction spike up, and then you can see, again, this is on a daily time frame, but I'm bringing this to your attention because I want you to see how this pattern that I look for and that we bring to your viewers' attention on a regular basis, it occurs whether you're talking on 1-minute charts, 5 minutes, and that's the robust aspect of it. When you see it's just repetitious, and ultimately, again, there's a lot of information in it. In this instance, we can identify a pretty well-defined upper and lower extreme. It's not just that middle 220 area that I wanted to draw your eye towards, but we've got 254, you've got 173, so anything above or below that, it's going to give us an indication here of strength, but holding above 220, the middle of this range is very bullish and opens up a door for a retest of 254. And again, that would fit right along with in line in terms of what we've seen as far as the trend, and not just since the pandemic. Look at this move. I mean, when we talk about giving the benefit of the doubt to the bulls, this is why. I mean, this is a stock that's performed very well. ITW, you can see as we look at the weekly time frame. Look, and I did a similar situation here. I just wanted to draw your eye to these larger, longer-term consolidation areas. Here again, most recently around 220, but look at this, 155. You're going back to, we're talking 2014, 2015, around 90. And again, migration of value. So not just on that intraday, we looked at the hourly time frame, the daily, the weekly. One more step into, well, remember how Achilles said that he thought that CAT had a little bit more to go here, it sounded like, in terms of relative to ITW? Well, I can see why. CAT's still below the 50-day moving average, ITW above it. So keeping an eye on that. But both stocks well above the 200. RSI not really providing a lean either way.
Yeah,
but
your
again,
higher elevation.
We're talking about a trend. Give the benefit of the doubt to the bulls on this one. They've performed very well here.
All right, Ben. And, I think it really showed the story, what a wide range that was right at the end. It certainly, Achilles seems, wild when you see that, but to Ben's
I still
point,
bull flagging.
The bulls, may have some legs here.
Well, I agree. There's a lot of room for this to go forward. We think that the stock is high quality. And like I said, this isn't a sexy story, but it is a growth story, and that should continue.
All right, let's get to Starbucks. Now this one, while the others you were saying 7%, 10%, this one you actually think you may have more upside for Starbucks. Why is that?
I think it has more legs. This story is definitely the best growth story out of the bunch. I think it's going to be a 15% upside winner. And let's go back to, we're looking at where Starbucks, Howard is, the CEO is now looking at bringing oil into their cappuccinos, and they're looking at a big difference. Yeah. That could be the next big growth for them. They're innovators. They come up with these crazy ideas that are not so crazy after they start working. So we think
that's not a crazy idea.
Big upside potential for this stock. However, near term, like all the stocks, they're going to face their resistance. They're going to face some setbacks. But I believe that this stock could easily be in the 120 range by the next 18 months.
And look, it's a winner year to date. It's a winner over 1 year. It's up 11% 1 year. So it has really held its own. over the long term. Olive oil, maybe that might be the key. I mean, it was pumpkin spice latte, it was unicorn pink something. I don't know. They do certainly do a lot of gimmicks, but it continues to do well. Ben, your thoughts here on Starbucks?
Holding its own on the long term and the short term. Nicole, as you dive into the more intermediate time frame with me, I've got hourly candles here. You can see the move from $82 in the end of October all the way up to 110, and then again in a very similar pattern in terms of what we were looking at as far as CAT, as far as ITW. There's zero rejection of this upper level. There's migration of value, right? In this instance, we formed an area of value into the beginning of November around 87. You get that
GME,
breakout,
there's
that
a big
vertical
support
move up,
for
higher highs
1940
and higher lows,
area.
Look what happens. You get a little bit more rotational overlapping around 91. Another big up move.
Yesterday
here,
not like flushing
sideways
down.
Consolidation around 100, a breakout to the upside. We top out around 110.
My puts.
That's what we like to call the stopping price,
Got
right?
some
You
leaps.
get high conviction to the upside. You
I'd like it to
stop
come down
out
more,
and
get more leaps,
just kind of
but
balance and rotate and see something that's a little bit more horizontal than vertical in terms of that move
It'd
up.
be nice
Now,
if it just
key
fully
area here
repeated
right
what
now,
it did
I'd
last
definitely
year.
be keeping an eye on this 100
Easy to
level.
read.
It's an area where you
New
bulls don't
low,
want to see us
RSI
retrace
divergence.
back down below that. So
Before
this is either a
earnings.
buying opportunity for that longer term trend to the upside, or in this instance, again,
Just gotta have
bears want to
patience
see
to
us
have
take out 100. But let's move away
cash
from this 60-minute
available
time
when
frame. I
that
want to show
happens,
you
if it
again.
does.
Talk about giving the benefit of the doubt to the bulls. We always look for trend, right?
sure.
Bottom
Looks
left
like it
corner,
wants to
top
hold.
right corner. This is almost a textbook example, a perfect situation that's been playing out. The bulls have got to be very
gas
happy
low.
about what's going on here. You can see the migration of value, but I went ahead and mapped it out for us. Remember that area around 100 we talked about, the significance there? Here we are again balancing around 108, but 77, 86. I mean, this is just that staircase type pattern that we look for, because it helps us not only determine trend, but it also helps us see when trend's breaking down, right? Because the bulls want to see a new area balance form above 108. The bears want to see us take out these lower lows around 102, the area we're testing right now, and a bit further below 100 to invalidate that working assumption that value's forming higher, right? Let's quickly check on where things stand in terms of the weekly, because Starbucks, you were talking about the wide range trade we identified in terms of ITW. Look at the wide range trade you can spell out here as far as Starbucks going all the way back to, we're talking pandemic lows around 50 up to 126. And since then, just kind of this wave pattern that's been playing out within that wider range here, Nicole, to show you where we are. Again, a stock that's just below the 50-day moving average, like CAT, holding well above the 200 though, and in a situation again where RSI hasn't really given us a lean here, but I'm just sort of providing that longer term trend, that bigger picture look here. In this instance, a trend higher. The third example of that here today. Achilles is dialed in on these stocks. I like them that have performed very well on the longer term.
Yeah, I love you. We love your charts, and you're really showing us how these things are dialed in and moving to the upside. Thank you for that. Ben, final thoughts, Achilles, just on the consumer too. How you feel, because that's really what drives GDP ultimately, and that sentiment. We got a weaker than expected sentiment number, but the big picture is how the consumer's feeling is how the economy's going, right?
Well, we have consumer confidence coming out this today. We also have some numbers coming, so we're going to digest that and see how that plays into the market. But at the same time, there's not big signals for a big recession right now. Yeah, we're seeing some unemployment numbers, but they're not huge numbers compared to what we've seen in previous recessions. So the recession story, I don't believe, is right now. I think if it's going to happen, it's going to get pushed back. It's going to push back probably third quarter, fourth quarter. But in the meantime, there's still plenty of room for high quality stocks to make money.
Yeah, all right, there you go. And you said 12% for Caterpillar. You had 15% upside probably for Starbucks. So you certainly are working hard on trying to pick some winners here. Achilles Larea, always wonderful to have you on the show in person. Thank you very much. Achilles Larea, founder, CEO, Larea Wealth Management. And of course, thank you to our own Ben Lichtenstein. Great job there with the charts. Coming up next, we're going to spotlight the satellite company, Terran Orbital. So excited to have with us Mark Bell, the CEO, co-founder of Terran, and he'll tell us all about the latest big, huge contract. Coming up. That's how we started, but look at this, coming back. As I glance down, I see the S&P has turned into the green. We have some sectors that are doing well. I mean, tech is in the green today. You also have real estate, materials, communication services, and financials. So things are looking better after a tough back and forth and a down month. S&P 39.85, the Dow at 32,785, down 103 points there. The Nasdaq up 18 points at 12,076, and the Russell gaining more than 0.75%. Now for a look at developing stories, I'd like to bring in Renita Young to take a look, Kevin Green to take a look at Advanced Auto Parts. Glad you're here to take a look at that. Tell us more about Advanced Auto Parts, higher after its earnings.
Definitely. We are seeing the stock up over 3.5% in the session here. They actually reported better than expected earnings here. Revenue came in at $2.47 billion versus the street's estimate at $2.42 billion. And then the adjusted earnings per share came in at $2.88 versus the estimate of $2.41. They are seeing an improvement in inventory availability throughout the remainder of this year, which is obviously a really good sign for them. That was a difficult issue that they were dealing with last year and actually the last 2 years here. Comp store sales were actually up 2.1% year over year, and their full year outlook actually beat on the revenue side, but earnings per share did come in shorter than expected or lower than expected at this point in time, but we are still seeing some confidence from investors in this stock. They also announced a succession plan. We do have Tom Greco actually leaving the company here. He will be serving as in a advisory role, but they did announce a transition strategy, which is also giving a lot of investors some confidence about the future for Advanced Auto Parts here. So yes, we are seeing some pretty decent moves here in this stock, as well as some of the other auto-related stocks. And right now, Nicole, at this point in time, this is actually some pretty good news on a day that's been fairly mixed, as you just noted earlier.
Right, understood. All right, Kevin Green, thank you for that. Appreciate it. It's time for our spotlight, the world of satellites. It's our pleasure to bring back to our show Mark Bell, CEO and co-founder of Terran Orbital, which soared 70% last week on big news of a big deal, awarded a $2.4 billion contract. Rivada Space Networks, this is for you to develop and manufacture nearly 300 satellites for this company. Good to see you, Mark. Thanks for being back on the show. I want to talk all about this contract and what's been going on. I mean, kick it off for us.
Well, thank you for having me back. It's exciting to be here. We are thrilled to have won the Rivada Space Networks contract. It's a $2.4 billion contract to build 300 satellites for Rivada Space. It's a huge validator, not only for our industry, but also for Terran Orbital as well. It is, I believe it's the largest single commercial space contract issued today. And we are just thrilled to have won it and confidence that they have in us. And it comes at a perfect time as we are just weeks away from opening up our new factory in Irvine, California. Our new factory opens up April 1st. It's a state-of-the-art facility, and which will dramatically increase our production capabilities. And you know, it's been a good week around here.
Live long and prosper, LLAP. We loved having you on when you launched this here at the New York Stock Exchange. You're talking about a new factory. Just give us how the company has grown. I know you have government contracts. You work closely with Lockheed Martin. Just give us a little backstory on how Terran Orbital started and where you are now, because there's even talk that Terran could be a takeover target.
Well, Lockheed Martin has just been a phenomenal partner. We sold a third of the company to them over a year ago, and they've just been amazing. We worked with them on the SDA's transport layer, Tranche 0. We were excited that we delivered our part of it ahead of schedule. We delivered it on Christmas morning, and that was great. And we are now busily working on SDA's Tranche 1 for Lockheed Martin. Out of our 31 programs in-house, we have 11 of them are with Lockheed, And we have about 61 buses currently on the production line. And we could do about, in the current facility, we could do 10 satellites a month. In the new facility, we can do 20 satellites a month. And so we continue to add capacity and we continue to industrialize. We're adding a lot of robotics to our manufacturing, both for building our components.
Yeah,
and our
Carvana has
modules,
potential.
And soon we'll be
It
doing
also
robotic
was like
assembly
maybe
of
to
the
go
satellites
bankrupt.
themselves.
So the speed
So
in which you
anything
can
like that, you're gonna get volatility.
develop and manufacture
If shorts are trying to
these
shut it down,
satellites is key. You
and it doesn't
said
go bankrupt, then
20
there you
a
go.
month. What goes into that? I mean, what kind of manpower do you need? You're basically doubling your output.
Yeah, I mean, a lot of it is because of robotics, where we used to build 70 batteries a
But
month.
yeah,
by
shorts,
hand.
an actual
We can
short
do over
squeeze
800
and
batteries
hype
now
and
using
momentum and
robotics.
gamma squeeze is totally different.
You know, we have 85% of the satellite we build in house. We've been vertically integrating, and we believe if you control your supply chain, you control your destiny. We're opening up a brand new printed circuit board assembly facility in a few weeks. We just opened up our 3D printing facility. We're opening up our test facility next month to do all our testing in-house. We really have taken huge strides from where we were 2 years ago to where we are today. 2 years ago, or 3 years ago, we were a company doing $20 million a year in revenue. And today we are a company that won a $2.4 billion contract. So we're showing tremendous growth, and not just for LEO, but we're talking to people about MEO, GEO. We did Capstone, which went to the moon in a cislunar orbit. And it is amazing things that the amazing people at Terran Orbital are doing. We continue to grow our headcount. We went from 100-some people 2 years ago to over 500 people today.
You know, as an entrepreneur, I don't know where in the landscape you are, because I know you've had your hand in so many businesses. You've brought several public. You've been in media, broadcast, plays, magazines. I mean, you've really had a wide array and a big lifelong journey. Where are you now? Where do you spend most of your time and effort, Mark?
I'm spending 100% of my time on Terran Orbital. I'm a lifelong Trekkie and sci-fi fan ever since I was a little kid. In a few weeks, I'll have the honor of putting one of my satellites on permanent display in the Air and Space Museum, which was like when I was a child, it was like going to Mecca. It was just an amazing experience every time I went. And I'm very, I love what I do. I work 7 days a week, and I love going to work every day.
The Air and Space Museum. So that's exciting. Good for you and Terran Orbital to be able to share that with everybody. What were your thoughts about all these balloons, the spy balloons, how the U.S. handled everything? I mean, without getting too political, what's someone who really understands that world a little better saying?
It shows the need for additional intelligence, reconnaissance, globally. I mean, we need to be able to track
stopped out of
objects
my
from
long
space
ES.
around the world, and you need more satellites. I mean, it's
Maybe a good
another
short here.
validator on why people like us exist.
It's such a tight
and
range
why
so far,
the
though.
DoD is spending more and more money and the intelligence community on satellite assets to really monitor the world globally. There's no reason why we shouldn't have seen it coming. There's no reason why we shouldn't have been able to track it the whole time. And we should be able to track every object everywhere all the time. And the technology is here today to do that.
Yeah, is the DoD spending more money? Have they been helpful overall in the world of satellites and what we need?
The DoD gets it. They really do. They understand the power of small low Earth orbit satellites. They understand the power of responsive space. They've been huge supporters. Space Force especially really gets it and grasps it. And the Space Development Agency, run by Derek Turneau, really understands what the mission is. He gets it, and he's pushing the limits, which is pushing the limits of people like us to do things faster, quicker, cheaper, better. And it's a dynamic sea change from these, what General Hayden used to call these big juicy targets in space. It's great to see how the government truly is adapting.
Yeah, just quickly on the balance sheet, it takes a lot to move everything forward, have the research, build the factory. Just a final thought on the numbers.
Yeah, we'll be having our earnings call in a few weeks, and we're going to be very happily talking about all our numbers. We're very lucky to have a partner in Lockheed Martin, and who continues to invest in us.
Yeah. Mark, it's wonderful to see you. Thanks for coming back on the show and giving us this great news, and congratulations to you and your team being awarded this huge contract. Monumental. Mark Bell, thank you. CEO
Thank you very much.
and co-founder of Terran Orbital. And then go see his satellite at Air and Space Museum. Thanks. Coming up next, we're going to be talking about Workday. Reported its earnings yesterday afternoon.
I just
We'll
moved
break
back
down
down to
all the
BWAP.
numbers.
Eating some food. NatCast looks like it wants to bounce a little bit here. I'm just going to leave my order. Very, very mellow day. Breaking through BWAP now. He's getting pulled with it. More days of consolidation, looks like. There you go, BBY. BBY is about to get to that 135 bid and 130. See ya. There's a little move on SPY down through BWAP now. Whee! Definitely some dip buyers on that gas. Things starting to rally heavy out of the dips. SPY moving down again. Leave you a triple bottom. Oh, EU closed 10 minutes ago. Closed right here, so basically sold off since then.
More margins to grow, some price target raises. I would interpret that too as mostly bullish on the better side of things, at least for the moment. Tell me how you would go.
AMC's red 1.5%.
George.
Profit taken on theirs.
The chart, Nicole,
commenced.
at least on a year-to-date basis, it does have a bullish tilt to it. Past the report, we're not seeing a huge movement in price action, which gives me an idea that valuation is balanced for the company. And so looking at a 3-year chart, you can actually see there's multiple areas, support and resistance around the 178.50 area. So with that said, we can trade around that level and, of course, participate if the stock continues higher or does pull back a little bit.
You mean now below VWAP?
So what we'll do in this case is sell an April short put vertical. We're going to actually sell the 180 put and simultaneously sell the 170 put. So altogether, this is sold for a credit of $3 a share or $300 a contract. And so ideally speaking, we'd like to see the stock stay above the 180 area between now and expiration in about 56 days. And break even on this trade is around $177. So it gives us some flexibility. It generates a nice return on risk. You're getting $3 of return with $7 of risk. And that risk isn't there in terms of the max potential loss unless the stock breaches the 170 or lower. So this is really more of a conservative way to play a continuation of the trend, or if the stock really just dithers around between now and perhaps the next earnings conference call in 3 months.
Thank you so much. A great look there. We really appreciate it. Nice look at Workday. Appreciate it. Thanks, George Sillis. Coming up next, turn our attention straight over in our 360 round to energy. We have the energy sector. We're going to recap the earnings from Occidental Petroleum. Some good news there from that company.
SPY's coming down some
Energy
more. I think I'm going to do a cash
stocks,
put on
what
Rita.
should you be watching?
Retta.
Trading.
$25 strike for March 17th. Oh, weekly. Oh, 17 days. Save almost $1,000. Yeah, that IB is insane. Doing it. $2,500 in capital to make close to 1,000. So potential turn to 64% ROI on what, 2 weeks? So I'm selling the March 17, the 25. Selling the 25. I'm just gonna do one. 25 put. So receive 969 credit. Buying power effect is 1500. Blown buying power for options. Only give me, it's doing on margin. Not affecting my buying power too much. My stock buying power though, that's where it's coming out of. What's weird is that's more than 2500. Why does it take out more stock buying power? I don't know. What? Let me sell puts. Oh, yes, that's right. Yesterday. Remember I opened and closed that put trade in the same day? Crap. I gotta talk to them. I knew I shouldn't have too. Like, right after I clicked it, I was like, oh no. But what? It was the put on GME. That's right. I'm not gonna be able to even open positions on here. Dang, I need to talk to them. Buy's bouncing up now. Oh, BBY flush to 136. Where were you guys? Filled some of those orders, I bet. Oh no, 135 was the big one.
Fruit bars.
Yay.
And
Yeah, AMC was the profit taking. Front running on the profit taking. Okay. Um Okay. Get that sorted out before BBY gets too low and we'll put more money in it. RBT is making a rally. Mullen also. Might be a good buy on Mullen. Bouncing off that support. He says he has no kids. Ashamed of the offspring? Bed Bath bouncing, but yeah. Gap fill still coming. High bouncing a bit. BBY definitely has a strong social sentiment. Yeah, crypto must be up. Coin's up, Mara's up. High bouncing off VWAP here. Basically just hanging out at the lows from yesterday.
That's kind of capping any upside for stocks at this point, with that 10-year, basically hitting the levels we haven't seen since November 10th.
The problem with this market right now is, and it's interesting, the dollar is now drifting higher. It's been down all morning. Here's why. Here's what I think about this. I think some of the France, Spanish, Japanese CPI all came out showing higher levels of inflation. Well, that means they're going to have to be more hawkish. Overall inflation across the globe is going up, which means banks are going to have to be more hawkish. We've talked about ours, but the dollar's been negative because Europe is worse than us. As bad as we are, they're worse.
Right.
So if they have to be more hawkish, that would be a weak dollar. But now the dollar, even with all that, is starting to drift to the upside here. Rates are already higher, so this market has some headwinds, and the headwinds are getting a little stronger as the day goes on.
Yeah, and that dollar's coming off of 7-week highs that we hit at the end of last week, too, and that had been trending higher throughout the month of February. Some of that inflationary pressures getting a little more sticky overseas, definitely. But one of the individual names today that's moving, Kevin, up over 2% is Target. Let's bring in Caroline Wood, senior markets correspondent here on the network, to help us break down this earnings event, because Caroline, it didn't look too good, just the headline numbers here, or looked okay, but then the guidance came in a lot lower than expected, but Target shrugging off the bad news here for guidance.
Yeah, investors seem to be forgiving of that soft outlook, but it was a beat on both the top and bottom line for the holiday quarter for Target. So let's run through those numbers. Adjusted EPS of $1.89 easily topped analyst expectations of $1.39. Revenue rose about 1%,
GME
a little
is
bit more
fixed,
than that,
man.
to $31.4 billion. That also came in higher than expectations of about $30.7 billion. Total comp store sales rose 0.7%. Brick and mortar same-store sales were up 1.9%. Expectations were for declines for both of those on both fronts, so those also better than expected. Inventories are improving. At the end of Q4, inventory was about 3% lower than 2021. Target did say, though, they're taking a cautious approach to inventory positioning in 2023. Meanwhile, operating margins were about 3.7%, so lower than they had previously forecast in terms of the longer-term plan. CEO Brian Cornell stated a very challenging environment. He noted that necessities like groceries and beauty and home goods, home essentials were what really boosted sales. And on that note, it's private label brands, which typically tend to be lower in price, actually outpaced or grew at a faster rate than sales. So it kind of gives you a sense of what the consumer is focused on right now. So similar, very cautious tone, just like Walmart. And talked a lot about uncertainty on the conference call. So given that uncertainty, let's talk about that
rally
weaker
there.
than expected outlook. Said first quarter earnings per share would be between $1.50 and $1.90. Well, Wall Street had an average estimate of $2.15.
Back
so
at that spot,
there.
might be a good
also
buy
said
there.
It expects full-year earnings per share of between $7.75 and $8.75. Also below consensus of $9.23 per
Basically
share for the
retesting
full year.
all-time lows.
Meanwhile, it said it expects same-store sales will range from a low single-digit decline to a low single-digit increase for fiscal 2023. So Target shares up 2.6% today, so sort of shrugging off that disappointing outlook.
Caroline, the margin news from Target's not very good, right? Margins in the threes. They want historic margins up near 6%. During the pandemic, they got up as high as 8%. But just like Walmart, I think the good news, the reason the stock is up is that inventory data. Down 3% overall, down 13% in discretionary inventory. So the problems that Target had 2 quarters ago, 1 quarter ago, were inventory problems. That's what's bringing down margins, and the fact that people are buying groceries, not electronics. But I think why this stock is up is an inventory overall getting better.
I don't know
They may
when
see
people
higher
bailed or
margins in the future.
if there was a big
Your
exodus
thoughts,
out of
Caroline?
GME
I
on
think
the
the
retail
same
side.
reason Walmart rallied is the same reason Target's rallying.
Not sure.
Well, they do forecast higher margins in
It's
the
met
future.
with such
they actually said that in the next 3 years.
animosity
so,
that probably
little bit
don't know
longer
too
term
much
there,
when
they
people
aim to
sell.
go back to that
They wouldn't tell. Wouldn't say.
operating margin income rate of 6%. They did say they could
So-
possibly reach that goal by 2024, depending on what the economy does and in turn how well the consumer fares. That being said, when they're talking about gross margins on the call, they did talk about continued headwinds, including inventory shrink, as you just mentioned.
Yeah, the
pressure
split.
for soft sales, for discretionary items, especially
I
some
mean,
of those higher ticketed items, as you also made reference to. Those obviously
If they didn't cheat,
are
if
higher
they didn't
margin
just
items
make
than
shares,
things like
then it
groceries
should have
and,
worked.
home
Having the split be a
essentials.
dividend.
Also, the increased potential for promotional intensity and promotional activity across the industry. They said, given that we're competing in a constrained environment for consumer spending. So definitely, I think profit margins are going to be a sore spot, or continue to be a sore spot. But yes, seeing some inventory improvement, which of course is welcome after what they had experienced last year. So I think that could be beneficial to margins, but definitely going to be a soft spot moving forward.
Yeah, that doesn't bode well, I think, for the overall economy, the health of the consumer, when you're pushing out getting back to 6%.
136.
In 3
Oh, yours
years.
is 135,
I mean,
huh?
yeah, I don't know.
I think you'll
Maybe
get
that's
triggered.
just me.
It could be as soon as 2024.
Well,
So
yeah,
it's all, we're all wondering.
I gotta fix my accounts. I
higher for
can't
longer
buy on
rates,
either of my accounts right now.
Will we enter a recession? I think
Suck
there's
at this.
obviously uncertainty in the corporate world as well.
Yeah, definitely uncertainty there for
I
the
love
guidance.
the guidance on sales. Down single digits to up single digits,
Yeah.
somewhere in that range.
I guess being vague is good for the stock that we're seeing today. All right, thanks to Caroline Wood, Senior Markets Correspondent here on the network, helping us break down Target post earnings. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for
You have it
Financial
at
Research.
it hit
Randy,
136.
We've been
Your
talking about
limit-
rates
your
on the
limit
show
order is
this
135,
week.
right?
We've got that 10-year up near 3-month highs here. Pulling back just a little bit, but it seems like that terminal rate that the market was pricing in below 5%, now getting up to 5.4%. Are you not surprised that we're seeing a little bit of weakness or maybe some resistance here for equities at this point?
No, I'm not at all surprised. I mean, as you said, you look at what's going on with the longer term rates like the 10-year, and you can see a very clear correlation there. Markets kind of
Highs moving up there now.
At the beginning of this calendar year. Those rates were going lower. Once the
All
market
this might
started
be
to
a good
stall
buy.
out, right around the time those rates started moving back higher, and it's going to be very
Basically,
difficult for the equities to
right at that
gain
historic
ground when rates
all-time
are climbing
low.
higher. And it's not surprising. You look out.
I
At
was
the Fed funds
disappointed when
futures
they
and what
they announced
our
some sort of
expectations are now
dividend
for
and
what
nothing
rate hikes
happened.
are going to be. Virtually 3 more quarter-point hikes are
After they've
essentially priced in already.
said they were going to
That
fight
wasn't
the
case
shores.
just about a month ago. About a month ago,
When
we
they
had,
do,
we had a
they
couple of them.
announce their
Now we got a third one.
special
Now we're
dividend,
still not looking at any
and it
50
caused
basis
no
point hikes at all.
price
Even
action.
the nearest one, which is on March 22nd, still less than a 40% probability of that happening. And historically, as long as we've got data on these futures going back, we've never had a hike when the probability was less than 60%. So that's probably not going to happen. But 3 consecutive quarter-point hikes is almost certain at this point. That doesn't mean there won't be a fourth one. It just means that that's far enough out in the future that we don't know just yet. But it wouldn't surprise me if things stay as they are. A month from now, we're looking at even 3 more after we've already had another one. So if that happens, and we've also got we got a historically biggest yield curve inversion we've ever had.
Yeah, I heard of a lot of people
gonna
that
make
didn't
a
get
tough
the split done
environment
right.
Yeah, and Randy, I've been pushing it a little bit. The fact that the market was predicting
Sounds
just a
sketchy.
month ago, as you mentioned, that we were going to get a rate cut by the end of the year. Is that perfectly off the table now with that that rate going up to 5.4% by what the market's pricing in as far as that terminal rate?
It is an
I
interesting
think, in fact,
situation. I'm not sure what's
in the
going on
camp
with
that
it.
we were going to get a rate cut this year. My
Not-
belief all along, and I know if you go back all the times I've been on this
Not
show,
sure if
I've
it's getting
mentioned
diluted yet or
We're
not.
going to get some hikes, and then
If
I
it's,
think the best case scenario we could hope for is a pause.
more than
where rates stay
5% of the
same.
outstanding
When
shares,
Jay
they have to
Powell comes out
report
and
it
says,
within
"We are
10
not going
days.
to cut rates this year." And I don't think he's
So,
saying we're not going to cut rates
hasn't
this
been
year
more than
based on
5% in the
data we
last
have
10
right
days
now.
at
We may
least,
change
or
our mind in a couple
from 10
months.
days ago,
He's flat out says
and before.
we are not going to do that. You just need to accept the fact that he's not going to do that. In fact,
Move it to
I would argue
131.
even if the data says that he should, he might not, just
Buy now,
because he needs
moving
to save
up.
face. So I've never been in that camp. The markets have been rallying on that premise, which he has tried to dispel for the last 3 months. I think he's finally successfully done that. And so, no, I don't think there's any chance of a rate cut this year. I continue to believe our best hope is that at some point they stop hiking and we just let it go sideways for the remainder of the year.
As far as reporting, I mean, there's probably a fine,
that are saying, look,
maybe
don't
pretty
get
minor.
ahead of the game here. The things that the Fed does take a long time to work their way through the economy.
Or
Yes,
they
they
just
hit things
don't
like
do
the
it
housing
and-
market right away, but everything else, it takes months and months for
Or it's
those
been less
things
than
to work their way
5%.
through. We should not be over hiking nor cutting. We should just hold tight, let what's been done take a full effect and see how things play out from there, because some of that stuff that you just can't control.
I guess once dilution's over, though, to me that's bullish.
Right. I mean,
So
when
them
is it
diluting
gonna
at this
start
price,
affecting, the things negatively, like the Fed probably wants it, Kevin. But if you
maybe
look at
that's
some of the data
bearish,
today,
but
Chicago PMI
news of it,
lower than expected.
the dilution
Richmond
being all
Fed
over is
manufacturing
bullish,
lower than
right?
expected.
So-
Finally getting a little bit of a break in home prices, but the
Big
data is
GG
still
did
not
that.
supporting, a move away from hikes.
No, I think a couple good things. The house price indexes, the two numbers we got today show the year-over-year numbers coming way down, which that's probably good for the housing market. Remember, 30 days ago, 45 days ago, housing market was looking pretty good. Yeah. You had rates sitting around 3.3 in the 10-year, and you had a housing market that was trying to recover. Well, you can put a kibosh on that.
Yeah.
It's interesting, but looking at the data like we have it right now, the only reason, Tom, there are so many people that are bearish right now.
Yeah.
That might be the only reason to be bullish, is that there's so much negative attitude out there that the markets are having trouble going down. But I think this market is going to get bumpy because I think you've got a lot of data and a lot of market attitudes colliding here, and something's got to give.
Yeah, and that goes back to the lag effect of some of the actions that the Fed has taken recently, and now the move higher in yields. The dollar also moving higher, even though it's relatively flat today. But Randy, when you look at this real quick, from an earnings perspective, it hasn't been a horrible earnings season so far, right?
It hasn't been good either. I mean, it's pretty much over. We're about 95%, I think, of the way through it. The expectations were pretty low. And yes, they were we had negative year-over-year earnings growth, but it was slightly less negative than what was expected. We had positive revenue growth, but just a little bit more positive. So both were a little better, but honestly, the bar was set pretty doggone low. And in fact, I would say this is one of the few quarters where the forecasts were actually pretty close. Yes, but they were both exceeded by a much smaller margin than what we've seen in previous quarters. And the beat rates on the EPS estimates and revenue estimates have also been pretty low. So it has not been a great earnings season, but it hasn't been terrible either. But as again, as we all know, it's not really about what happens. It's about what happens versus what was expected to happen.
Yeah, Kevin, if you look at that consumer confidence number, tumbled 102.9 in February, weaker than expected. That's probably what the Fed wants to see, and you're probably seeing it reflected in a lot of the retail earnings. Also, the consumer is trading down and pulling back just a little bit.
Again.
Yeah, we're going to get a lot of retail earnings this week, and yeah, I think the biggest surprise data point we got today was that consumer confidence coming in. They were expecting it to tick up, and it ticked way down, 102.9. It's a big downtick in consumer confidence. Where's that coming from? That might be why rates firmed up here. Yeah. But the move in rates probably put some volatility into that number.
Yeah, and we'll get some more clarity on that throughout the week. You mentioned the retail earnings that are expected, and we're going to talk about one when we come back from break here. We're going to talk about Lowe's, which reports earnings tomorrow morning. We'll see if they come out with the same commentary on a soft guidance that Home Depot did. Fast Market's coming right back.
Yeah, my E-Trade, I can only trade with settled cash, but it should be settled today. It's Tuesday. That's what they said on the chat yesterday. They said, yeah, you'll have buying power tomorrow. I think my TD must be in that also, because I did day trade yesterday. Oh, I forgot I still have Hellbiz. I never got rid of it. I was wanting to buy more, but I can't. Here, Gary cuddles. Big cuddler, Gary. All right, BBBY, come on. If SPY sustains this rally or just rejects here again. I think it has some strength. Thinks wanting it to go to 80 cents. Because he wants to buy more. 88's all-time low. What's cheerleading? I know, Helba's, if I had buying power, I'd probably average into it.
estimates for Lowe's are quite conservative, to say the least. If you look at Home Depot prior to the earnings release, they were expecting EBITDA growth for the fiscal year around 8%. That was cut back all the way down to 1%. Whereas if you look at Lowe's, they're really only expecting about a 1% growth in EBITDA. That's a low hurdle for them to actually overcome. And that might be, again, one of the catalysts that propels the stock higher. But nonetheless, you have to consider there's still some sluggishness in the existing home sales market, in the remodel market, that may not necessarily be offset by home improvement and, of course, maintenance and repair product demand.
Yeah, definitely going to be about foot traffic for this one as opposed to those pro services. Thanks to George Tillis, senior markets correspondent here, breaking down Lowe's ahead of the report.
It's waking up there, maybe rejecting.
Randy, your take here on Lowe's. You know, it's a duopoly in the home improvement space, but at the same time, they've got different businesses. Is this going to be what George mentioned, you know, all about foot traffic and people staying put with higher interest rates where maybe they can't move?
Yeah, it's really tough to call because there's so many competing factors here. Obviously, we know the housing market has slowed down a little bit. As you said, people aren't moving as much. But at the same time, people are also pulling back a little bit on remodeling. Yes, they are fixing things that are broken and need to be repaired if it's necessary. But when you see incomes starting to level off, but spending is still high, what we see is credit is going up and up and up. Well, with rates being higher as it is, eventually people are going to get maxed out, and they're not going to want to continue to rack up that debt, certainly not at this higher rate. So they may be a little bit hesitant to do anything that doesn't have to be done. Major renovations and remodeling, that stuff has already, we've seen a little bit of a pullback on that. Yeah, the business models aren't identical. They are a little bit different, as you mentioned many times. Home Depot has a bigger contractor segment, but from the retail perspective, they're pretty similar. And if you go into the few, I go to both places quite often, and they're right across the street from each other, the ones I go to. And frankly, you can't hardly tell which one you're in when you're looking versus the other. They're pretty similar. So the challenge is, if you look at what happened when Home Depot announced their earnings, the stock went down about 7%. And in fact, Lowe's dropped about 5% on that same day in sympathy, if you will, with it. Now, these two don't always move in the same direction, but if you map one on top of the other, generally they tend to go about the same way. And what we've seen, as you guys were talking about earlier with Target, is that even if the numbers come in decent now, the guidance is continually lower from almost anybody who's selling a product versus a service, because products are just not moving right now. Services are. So they may have decent numbers and guide lower, and most of the time that doesn't speak well for the stock, unless George is right and they set the bar sufficiently low that they beat it, in which case then they go up. So you got a lot of, I think, competing factors here.
Yeah, and Kevin, that fact that Lowe's has filled the gap when Home Depot earnings came out, but now Home Depot is still down there.
I think that Home Depot's earnings that consisted of higher ticket prices but lower volume, right? That's what scared investors about that stock. I think the fact that Home Depot is 50% pros and Lowe's is only 25% pros, that gives Marvin Ellison something to shoot for. Yeah. I think he can make a positive case for Lowe's in terms of their ability to grow. He's got a loyalty program now. He's got volume discounts. He's got dedicated staff for pros. So the competition there is going to be interesting, but Lowe's trades at a higher PE than Home Depot. It's got poorer margins. It's got lower return on capital. So there's an interesting relationship going here, but you might make the case that if this area of the economy is getting better, either own both or own neither, not one versus the other.
Yeah, that's true because of the overall macro environment that we're in.
It's either getting better or it isn't.
Right. So, Randy, we've got implied volatility elevated going into this report. You've got an example trade for us.
Yeah, I think the points Kevin make are good ones, but they're a long-term story. They're not necessarily what we're going to see when we get Q4 earnings right now. So, yeah, volatility is elevated as it always is before earnings, but it's not as high as you would have expected. So, again, we got to do an example trade. I'm always trying to look for one we haven't talked about before, and I'm not trying to state my perspective as bullish or bearish, but let's just say that because we saw a downturn in Home Depot, we think maybe we might see a little bit of a downturn in Lowe's. We obviously like to talk about risk-defined trades so that if you're wrong, because if you trade, you're going to be wrong sometimes, you don't get clobbered. So what I thought I would do here is take a trade that most people know about as often as typically talked about as a neutral strategy, but show you how you can sometimes put a bullish or bearish bias on this one. And I liked sort of this as a good example because it kind of had an interesting risk reward profile. So we talk about iron condors. So we're going to take an iron condor, and instead of having it be straight neutral, let's assume our belief is that this one might struggle, similar to what we saw with Home Depot, similar to what we've seen in the past with previous earnings reports, and there might be a little bit of a downturn, but we don't think it's going to be substantial. There also seems to be some technical support right around 200. So maybe we believe there's going to be a downturn, but it's going to be relatively modest. How can we take advantage of that at a relatively low cost? So let's construct an iron condor. We're just going to go out to the end of the week because we know earnings are coming out tomorrow morning. We're going to look at the March 3rd expiration. Buy a 195 put, sell a 200 put, then sell a 205 call, and buy a 210 call. When I looked at this about an hour, 45 minutes ago, you could get about a 330 credit on this one. Now, when you have a four-legger like this, it's made up of two-leg spreads, but your maximum profit on this particular trade is going to be anywhere between the two middle strikes. So if you get between 200 and 205, that's where you're going to hit max gain. If I remember correctly, this one was trading right around 205, maybe 206.
I took a short there,
I put this together, which
but I
means
actually just closed it out.
you're going to need a little bit of a downturn move, just a small one, in order to be in that max profit zone. But you can actually make a profit on this thing anywhere above 196.70 all the way up to 208.30. And then, of course, your max loss comes when you're outside of the wings. So 195 to the downside, 210 to the upside. So, again, it's a relatively conservative trade because it's a 5-point spread. You've got a 330 max gain, which means your max loss here is only $1.70. So if you get any kind of a downturn that's not too great, you got $1.70 at risk here to potentially make 330. And if you're wrong and it all blows up,
you want to use a 1-month chart?
Yeah, so
like
let's break this
candles?
trade down. It's about a 3-day trade till the
that.
end of the week here.
This is Webull.
Selling a $5 wide put vertical, the 200, 195. Selling a $5 wide call vertical, 205, 210. You're collecting actually.
I don't know. Does Yahoo have it?
Because the stock has moved higher. About 350 credits. That means your risk is going to be about $150 per spread outside of 195 and above 210 at expiration on this one. Your break evens. 208.50 to the upside, 196.50 to the downside. You've got some assignment risk on those short options going into expiration this Friday, Kev. But this is a pretty good risk reward setup, but it's because it's a tighter iron condor, right?
Yeah, this has got about just under 6 deltas of short. And so what Randy's doing, he's targeting right around the expected move, but on the downside. Make no mistake, this is a bearish play. So this is one that uses the iron condor, but gives it a little attitude, like we talk about a lot on the show. He takes the fundamental concept, gives it a little attitude. This time about, like I said, right under 6 deltas. If it lands anywhere in between 205 and 200, you got a nice winner here.
Yeah, the good risk reward setup here if you think this stock's going to remain relatively neutral. Now, we mentioned the apex profitability between that 200 and 205 strike to the upside here, or basically at the money.
GME's coming down here with the SPY going up.
And a pretty good risk reward setup on this one. All right, good look at a short iron condor here, taking advantage of the higher implied volatility with the tighter range here going into earnings. And thanks to Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, for helping us out today. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Monster Beverage, which hit an all-time high this month and reports earnings after the close.
R.I.P. Ken Block. They're still using him for their ad promo. Looks like SPY's gonna actually break that level. GME an uptrend. Time frame ruthless. Alba's still going 13.5. Nice daily engulfing today? No. But big bounce off this support. 15-minute? Don't really use 15 minutes. Yeah. Yeah. Yeah, I mean it is at the support, so I thought we'd flush through it, open up puts. We didn't. Close the puts, started getting leaps. So yeah, this might be our low. If we start to come down here though, I'm gonna get back into those puts somehow. It's not even moving my SPY right now to the upside. It's going down all by itself. Alba is 17%. Oh boy, things are getting wild. Ace, are you playing this? Volume's picking up too. Whoa, those flush of cells there. 1340. Contemplating getting back into the short here. Nice.
Strong and powerful and gives it a lot of advantages. But this healthier, kind of like the Chipotle of energy drinks, right? The healthier Celsius. Yeah. Is that just eventually going to get more and more popular?
Yeah, well, the good thing about Celsius is, you know, it only has 2% market share. So there's a lot of upside there. And when you've got a tailwind of a growing industry, you know, having a small portion of market share can be a much larger opportunity for investors. But on the other hand, Monster's also
Like
in a really
10%,
good
nice.
spot. It's clearly, like I said, got the distribution nailed, got the marketing, the brand identification is, top of the line in a growing industry and reacting really well to competitors. I think,
Jump on that thing early.
it's really just more of, do I want to be, on the more volatile, a little bit riskier, small company side of things with bigger upside, or do I want the tried and true Monster hitting all-time highs with the stock, like Tom mentioned, is a really big deal. And the upside for Monster is, just like for Celsius, is unlimited. I mean, both of these are in an industry with a tailwind and doing a very, very good job.
GME's not red.
Yeah, and Andy, I did an
just
unscientific
big wick.
tweet earlier before the show started, and I said coffee, Red Bull, Monster, and so far the results, coffee's still in the lead, but you're seeing a pullback as far as your data goes here in coffee drinkers, but Starbucks seems to be doing okay.
Yeah, Starbucks is doing okay, and the reason that they're doing okay is because they're able to, throw the food
AMC
into there. They've
profits
got
are
all
getting
those different kinds of drinks
taken.
that I don't know if you would necessarily qualify as pure coffee drinks.
What
They
goes
look
up?
more like milkshakes, I think, to me a lot of times. But people love them. Starbucks isn't going anywhere. Monster isn't going anywhere. We think Celsius is on the rise. This is an industry and a movement towards higher energy drinks that isn't slowing down, and we think there will be a lot of winners in this space.
Now, expectations pretty high going into earnings for this company.
Cost base is like
expected sales to increase by
27.49,
12%.
Still down
what kind
50%.
of earnings score do you have on Monster into this result?
Up here.
Yeah, we think that Wall Street has it right. We think sales will be up about 11 to 13%. That's where
Now SPY's coming back
our
down.
data shows them coming in. I think overall pretty neutral going into earnings, but if I had to bet, I would be looking at that unlimited upside of new all-time highs. I really like playing earnings when companies, if they get to that all-time high, there's no resistance, there's no supply overhead, and it could move quickly over the next 15 to 30 days. So that's a big if, but there's always a shot when you've got a company like Monster.
Yeah, and the fact that Coke owns nearly 20% of Monster at this point. Is it a takeout target? Those rumors have been swirling for years. Maybe there's a little bit of premium to the stock there also. All right, thanks, Andy. Appreciate it.
Thanks.
All right, that's Andy Swan, co-founder of Likefolio, breaking down.
It's actually
Monster,
coming down now.
Could
have held my short,
They're
but
neutral as far as their data goes, Kev. But if it breaks
kill
through
losers
to new
quickly.
all-time highs, is that pave the path to higher? But maybe some market share advancements for Celsius and maybe some of the others.
105.45 is the all-time high that Monster traded a couple days ago.
That might be resistance too.
So there, and that is the genesis for my trade, my paper money trade, which is selling the 105.110 call vertical in March 17th. So they've only got monthlies; they don't have weeklies. There's one of the problems with this. Now you could go further out, but. For $1.25 credit is where I have this now. I sold the 105.110 call vertical, Tom. Just in case, like I said, if it gets up to the all-time high and pauses there, this will be a winner because my break even 106.25.
Right. So if you take a look at this, you're selling an out of the money call vertical. Your break even's above that all-time high here for Monster. You're staying risk defined, selling the March 17th monthlies that expire in 17 days, the 105 strike call, buying the 110, collecting roughly about $1.25, $1.30 credit we've got up here. It takes your break even to 106.30 to the upside here. Anticipated market maker moving this stock, Kevin, about $5.50 either way on this, but expectations
going again.
pretty high. Is that when you look at
Hasn't
trades
really cooled
like
off
this,
at all.
it's risk defined. You've got some assignment risk on your short option into expiration over the next 17 days, but it's not basically an earnings play because you do still have a couple weeks.
15
so even
cents.
if the stock does pop, I mean, Target was a perfect example.
Sure.
That stock traded down $14 from where it's trading now after earnings. That looked like bad guidance. Now it's up, but you've given yourself some time, even if the stock does pop.
Yeah, the idea for this trade is selling call options at or above the all-time high in the stock. If you don't think that's the right
yeah, but they can
scenario,
get
don't
better.
do this trade, right? This has
And they
risk
can't
of
continue
about
to go up.
$3.75 if it were to go up towards 110. So if you think,
but yeah.
like Andy mentioned, that this could be a bullish
Worst time
breakout,
to buy.
don't do this trade. Do something other that
Buy
might take
options
advantage
is when
of
it's
that, like
ripping.
a calendar spread or something like that.
Good
But
time to sell
this
'em.
is giving you about 20 short deltas, Tom, almost 21
If you get
short
spreads,
deltas
it doesn't
over the
matter
next
as
3 days.
much.
Or, I'm sorry, till March 17th.
Because you're selling
as there's
options
no
as well as
weeklies.
buying
Yeah,
them.
this might be one of
Whoa,
those
this thing's gonna
stocks
get
that
halted.
they've got to hit it on all cylinders with the stock trading at the levels that it is, at or near all-time highs here, just above, as Kevin mentioned, 105.45 to the upside on that one. But a good look at maybe a little contrarian here, but you're also playing maybe for something neutral if the stock doesn't move.
Neutral works too.
Yeah, for post-earnings. All right, Kev, let's take a quick break here. When we come back, we're going to take a look at Dollar Tree, which is down this month.
Yeah, I think it's about to get halted a bit. Wouldn't necessarily be a bad thing. It'll trigger a lot of scanners. Probably increase the velocity a bit. But then you're probably going to get some... Hits the scanners, then the traders come in, and then they pump it, and then they're going to sell it. I mean, it's got a pretty big float. It's not that small of a float. Juice was worth the squeeze. Thanks, Ace. I appreciate it, man. That didn't trigger anything? Did you hear it?
Let's get nuts!
Let's get nuts! Oh, where's the gift? What the heck? I gotta look at that. Thank you, Ace. Legend.
Let's get nuts!
There it came through. There you go. That's for you, Ace. Get out of here. Getting a head start on the border crossing. Oh, Jimmy is still on help his. Jimmy's grinding down, just leaving the SPY. Still not giving up that this could still be a support. Alba's 24%. Oh, you might get out here, out of the trade. Yeah. Oh, I guess I never had a gift for that one. What's this one? Oh. Yeah, the help is, yeah. Alright. I'm a bit slow. Yeah, I don't even really know, like... Guess I'd say like 15 cents. But it's kind of in this range over here where it could start to hit some resistances too. SPY's moving right back up, just like that. So... yeah, like SPY's gonna maybe make its way back up to that pre-market high. And yeah. Full volume. Decent indeed. Yeah, you caught that early. There's SPY moving up more. BBY yet to really give us a good flush. Still just stair-stepping down. AMC's maybe found some support. SPY about to make a new high on the day. There it goes. There's the pop. SPY pop. SPY is ripping now. Five point six magnitude earthquake hits Turkey. That place again hit a lot lately.
grind lower, but it doesn't have to go too far below the current share price.
This spread, all puts. It's in the Iron Condor family, but it's all puts. Between 141 and 137 is where that top of that plateau is up there. Obviously, on the downside, you've still
Yeah, I
got
think 130 is
profits
still on the table
because you're
for
buying
BBY.
$4, selling $2. But this is one certainly about 6.5 short deltas.
Right. I anticipate a market maker move here, Kev, about $10
Started to feel like gap some
either
today.
way on something
Not sure
like
if we'll
this.
make it
When
today or not,
you're
but-
buying a put vertical and financing it with selling a put vertical, you want to make sure that you get
No real
enough
sign of
credit
a
on that
bottom
short
yet. It's slowed down the last few
137,
days,
put
which
vertical in this one.
Wait,
means it's
what does that mean exactly?
finding a
That
bottom
means
potentially, but
get paid for the risk you put on.
No
when
upside
you're
yet.
doing something in the Condor family like this, the 137, 135 put verticals.
Yeah,
gonna
the
be
short
further
interest
out
and
of
the
money.
FTD is
Make
pretty
sure
crazy.
that risk reward on that individual put vertical is high enough.
Right, and you know, with paying $120 for something that can top out because you're buying a $4 wide one, basically $2.80 or $280 is what you could profit if the stock is between 141 and 137 at expiration, and that's what you're going for. But if it does crater and collapse below 135, Kev, you're still
Helva
okay.
is down.
Yeah, exactly right.
Went back down. It's up
$4
15%
versus
still.
$2 means you've got some profits.
Some of you
if
guys
it
took
goes
profits
below
there.
That, but like I said, you're looking for something in between.
Could have another rally
141
later in
and
the day, but
137. You want the one call vertical to go to full value, the other go to zero.
Yeah, if it goes below 135, your profit's going to be $80 per spread.
Birds
on
at
that
12%
one.
now.
So good look at a bearish put
his
condor
sympathy
to the
to help is.
downside, but it doesn't need to be massively bearish on this type of trade, and a lower cost entry put because you are using those four legs, helping finance the vertical buy by selling a $2 wide one. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around on the network here. Next Gen Investing is coming up next.
SPY still moving up. Buying HKD also? Yeah. This one's a lot more sketchy than GNS, I'd say. Oh, GNS had a bit of a bounce. Thing's probably going to come back here and maybe fill that gap back to the $2 level. Albiz might be taking its place for a bit with this short, illegal short crime fighting unit. Birds, yeah, Birds might just be in sympathy to Helbiz. We got a little bounce with the SPY move there. Yeah, well, if you had a thought or a plan, then sticking to it's good. I played it twice now. Last time I lost a little bit. So I got it at the all-time low, and then it broke below that the next day, and I sold. And then after hours that day, it ripped. And the next day it ripped. I bought back in. And then I think I sold it. But before that, on the last big move it had, I made money on it. It's not one I just want to buy to hold though. That gas moved back up to VWAP. Down 3% on the futures. Got chopped. All right, yeah, you too. Thanks, SHF. A jam. Don't hear that one very often. Still be looking to maybe short ES at this 399 from yesterday. Made a bunch on the last round, the last little one? You must have had a lot in there. About this one from, oh, this one. This is the one the last one I traded. Or no, where was it actually? Yeah, it was this. I didn't trade this one right though. Like I said, I lost money because I closed after it broke the low. And literally the next day it ripped. Then I bought back in and then, yeah. Yeah, I'm more sketched out now that it's broken that low. This run I did pretty good on. This one. Oh, we said GNS. Man, I'm trying to get a coffee going. This is bad. Made a bunch on the GNS run. That gas is rejecting VWAP there. Bird still up 11%. Hellbiz back to VWAP up 12%. On the big GNS rally. HKD. Oh, GNS, yeah. Yeah, I mean, that thing, it was played out over a long period of time. It was nice. I mean, there was definitely there's big candles there, so that can sometimes be hard to hold, but overall, it was very smooth. You know, even coming down now, it's been quite slow. Someone was asking me about it after it was like up here, and I said it's probably going to start coming down. It did show this RSI divergence happening, but then it just kind of hung out for a while. Actually, here I think I even said it too, maybe because there was a divergence there, and then I made one third one, and it just kind of stalled.
this is suddenly going to deter, as you mentioned, the hundreds of millions of Americans who are on this platform on their own personal devices. This is one of those things where, companies decide you can't access certain, websites while you're at work on their devices. The same thing works for federal devices and apps. And like you said, I'm surprised that many of these apps have been allowed on company phones to begin with, particularly if they're not dual use as both personal and kind of work devices. But gonna say down vote for Meta.
Right. Taking the short here. Made it back just in time.
To our advantage here, Rick, is I do think we've all echoed the fact that there is some degree of risk when looking at trading this name, especially given the volatile event that will be its earnings, but also the fact that, you know, you mentioned the price ranges between $6 and $8 roughly. The market's
had a good bounce off VWAP.
around a $1 move ahead of earnings. So the fact that we can't necessarily see massive, I mean, I guess we could, but just relatively its price has then, I think, made this name a little bit more accessible. So then with that
Nice
in
little
mind,
back-to-back
Alex,
trades
example trade, I think
for
we've
you,
all hopped on the
BBBY or AMC rather.
an added degree of volatility and also some
AMC and
unknowns with
Hellbiz
this
coming
name.
in.
But walk us through what you're thinking for an example trade.
Yeah, first off, I think the appeal to this name was that it went from $10 to $70, and it only took like a week for that to happen. So everyone looks for that opportunity to risk very little to make a lot in very short orders. And quite frankly, that just isn't the commonplace for investing and for trading. And so if you wanted to take that sort of a chance on a name like AMC or any other names and buy shares of stock or buy a call option or even bet against it and buy put options, whatever it may be, which would be perceived as maybe a lower probability event, but also a chance to make a lot on the capital. This isn't necessarily that conversation. It doesn't take much educating or learning. It's just simply taking a shot and hoping you're right. I wanted to look at something a little bit more strategic because this stock trades with hundreds of percentages points of implied volatility, and that tremendous uncertainty and option premium that's priced in as a result of this capability that this name has to make tremendous moves is potentially opportunity. There's risk involved in that, no doubt about it, but we can do things that we do in other names, even though it's a $7 stock, and still get comparable premium returns on the risk. And so looking at this here, I looked at going out to the March expiration, so this is just a couple weeks away from this Friday. The 6.5, 5 put vertical. So selling the 6.5 put, which is about $1 below the current share price, buying the 5 put to define the risk, also make it a little bit more capital efficient as well. But if we're able to get 50 cents out of this as a credit, that is a 2-to-1 risk-reward ratio. We're risking $100 to make 50. The break-even is 6. Well, the stock's trading about 7.30 with about a $1.15 market maker move. Well, that's not even down to $6. That's to $6.15. So you could have the move to the downside and still be above that break-even point based off of what the market maker move suggests and options are pricing for a 1 standard deviation range. But it's an elongated Z risk profile. We start in that max profitability zone. The downside to this, because people want to know downsides, well, the downside is it's defined profitability the same way that it's defined risk. So there's always a trade-off. If this stock goes from $7.30 to $15 tomorrow, well, we know the maximum that this can make. It's the same as if it's $7.30 tomorrow as well. And so you look at it that way. There is, of course, trade-offs, but it's a higher probability trade than just simply buying and hoping, which is, I think, a lot of times the strategies that are applied to these meme stocks.
Yeah, and I don't necessarily like the idea of just buying and hoping. I like to be more strategic, like you mentioned, Alex. But now, our next name today, also a pre-earnings look at Rivian, also a name that has a ton of volatility here, Rick. Although this name, there are still the very strong bulls, also the very strong bears, but it has also seen a good degree of volatility this year, but now well off
It's funny how they
lows
just,
and
they don't even, it's like they
so
think you shouldn't even trade it because it's
another one that's seen a devastating
volatility,
move, I would say.
or put in
and
their
it
basket
hasn't even
of
had
meme
the luxury
stocks.
of enjoying as much of a bounce
So-called
as
meme
AMC has.
stocks.
We're only up about 26% or so
Oh,
off
well.
those yearly lows that formed right
You
here
know.
near the 1528 mark. So
They're going to do a spread no matter what. They never say long calls for long puts, but when it was around AMC, it's like,
lower here,
you know, you
but we
wouldn't
are
just,
making,
most people
once
just
again,
buy
a
calls
very
or buy puts and
modest
just
upward
hope for a
channel
shot in the
that's starting
dark.
to form here. We are trading above our yellow 21-day exponential moving average as well, but we're also below the value area right here. This thick yellow line, that denotes where 70% of the trading has taken place during this time period. And I thought it was pretty unusual to see a volume node, a spike in trading activity taking place outside of that, outside of the value area. So this suggests to me that people are coming in trying to catch the proverbial falling knife on this one, so to speak, coming in and buying up shares at this low level here. Is that a good idea? Time will tell. You know, we don't know exactly how that's going to play out for people. It all depends on where you choose to sell it here, but typically a kind of risky strategy to trying to do in a name like this. Now, looking at the momentum here, RSI right in the middle of our range here, right in this midline, the 50 mark, which suggests momentum is not really showing a strong reading one way or the other here, which is not uncommon heading into an earnings event here. So places we might look for a stop in the eventual move that we'll get for earnings.
Jim.
First of all, to the upside, look for around 2140. That's our orange 63-day exponential moving average right there. That could be a place where traders might be willing to take some profits or be willing to take off their positions if it reaches one of these points, because remember, these moving averages are support during uptrends and resistance during downtrends. So this could be an area of resistance to watch. To the downside, we've got the lower end of this channel, this upward channel that we're in, right around here. This could be about the $17 mark or so. That could be a place you might expect to find some support if it does hold. Beyond that, we've got the yearly lows near 1528, and beyond that, you know, who knows? It could be an ugly situation if we do breach those levels here. So once again, just a reminder, be careful if you want to trade these types of names.
Yeah, Rick, and I think that really that is so important because we know from looking at some of the other EV peers that have recently reported. I mean, Lucid completely broke through all of its given support and resistance and all the technical trend lines at post earnings. So these names move. That's one thing that is pretty much, I'd say historically certain. But we will leave it there. Appreciate all of your technical insight as always, Rick Ducat, our chart master. So Alex, when following Rick's cautious tone, what are you thinking today for a more neutral to bullish example trade, maybe more leading optimistically here, as there are still so many believers in this EV market in Rivian?
Yeah, and this one's a little bit different than some of the others. It's had clear investment from names like Ford and Amazon throughout its history.
Really?
It's very publicly underperformed, let's say, Tesla. When you look at it year to date, maybe up like 10%, off the lows, maybe 20%. Well, in both those cases, if you look at Tesla, it's like doubled off its lows, and it's up a huge
RSI divergence during the daily.
Well, why would I ever choose a
This does look like a pretty nice setup, actually.
To underperform a better
Although you did have
name,
another one
if
back
I could
there.
just put my capital in a name like Tesla that's already making money if it's going to do better. So the reason money finds its way to a name like Rivian is there's that feeling that, yeah, there's higher risk, but in return for that higher risk, I should have a higher return
18.4%.
That's just kind of the give and take of investment. And so with a name that is
Holding
pretty
up
close
pretty
to
high.
its all-time low, its year-to-date low, I wanted to look at sort of a buying of the dip strategy around earnings, using this heightened uncertainty around it to structure a trade that, yes, is defined risk, but also high probability and has a chance to make money if this stock just maintains the current value. And so it's a skewed put butterfly. There's 50-cent half dollar a wide strike availability in March. So this just goes out to that same March 17th expiration. Buying one of the 19 puts, that's the first strike just out of the money. Then selling two of the 18.5s, and then defining the risk by buying one of the 16.5 rather puts to the downside. 50-cent credit. So if it just all these options expire worthless, the stock's above 19. That 50-cent credit or $50 is what the investor would anticipate keeping if these options expired worthless. Total risk on the trade, if all the options were in the money, that means it was below 16.5 at expiration, is $100. So that same 2-to-1 risk-reward ratio, but because we have that added component of that extra debit spread within here, there's a point right at 18.5 where this one can actually expand out to $100 of maximum profit, and that boosts that break even down to 17.5. So sort of an added kicker element where these options are in the money that makes this different than the AMC trade. But if they're all out of the money or all in the money, it's going to look a lot like the performance that you'd see in the same way for the AMC short put vertical. But just a couple different ways to look at pre-earnings names, high volatility names, relatively low price names.
Looks like it's going to break
use
out.
that uncertainty as opportunity.
And I will say, at least these two
Coinbase
names always
has
keep
just
us on
been
our toes.
grinding
They
up.
both do always have some headlines, lots of news to get through in both Rivian and AMC. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk all things Norwegian Cruise Line, lower on the day, dragging on its cruise line peers after some lackluster outlook going forward for the cruise liner.
BBBY. Let's see it. 136. It hit it again. Flush. You can do it. I just ripped through the high. I closed out of my short. I stopped out of it. Took a loss on it. It was just a resistance short, which a little more risky. We'll see. Now that it's actually getting up here, maybe it will actually reverse, but we'll wait. 135. There's a lot of. There's 230,000 on the bid. % tomorrow. I don't know. I wouldn't deal in absolutes like that. Oh, look at that wick. Just took me out. Right up to the resistance too. I don't know if we go to $1 even. $1.30 will be support, and then got $1.27. But maybe it is a nice even number. Ah, look at that wick. Oh, sometimes killing losers quickly can hurt.
Order here. This one's almost, you know, at
in
escape
hers.
velocity here, it seems like, Kev, and I think that's what investors have been hoping for is, I mean, one, psychologically, just to get back in that double-digit mark has to be huge for investors.
Definitely, and you also want to have analysts on your side as well, which is what we are seeing. This also could have been a little bit of a short squeeze taking place as well. Once you start seeing stocks cross that $10 level, start going to 9, 8, and the single digits, you tend to see a fair amount of short interest increasing as well. So yes, this is actually outperforming the street's expectations, and the telehealth space itself has actually not done as great as this stock. If we even talk about Teladoc, we can kind of look at that chart, and yes, it's actually had a decent pop from its lows, but still has not performed like this particular company. But obviously 2 different market caps as well. We have to keep that in place, but I don't care what your market cap is. If you can go up 76% in a matter of 2 months, I think that's just that's outstanding performance to say the least here.
Another huge critical point too, as I'm just looking back over the prior history, is you see that flat line at around the $10 mark for quite some time, usually indicative of a SPAC offering for its debut to become a publicly traded company. Above that $10 mark here now, a couple years later, it's not huge, it's not a tremendous return, but it is above sort of where it started. And that is certainly not to be said for very many of these names, Kev. Any final thoughts here before we say goodbye?
I definitely agree with you. Yes, we have not seen great performance when it comes to SPACs. This actually used to be Oak Tree Acquisition Corp, so great call out there. If you can get above that, the offering price before it actually started trading as this company, then obviously that is a good, that's a good move for the SPAC stock at the end of the day. But yeah, SPACs have not been, they're very popular. It was something that was all the rage last year, but we have seen the performance be a little bit more lackluster than the street expected here. So this might be a bright spot out of a bunch of SPACs that just haven't performed at this point.
Yeah, and like you said, a little telehealth involved here as well. So again, sort of that innovation to a long-standing industry. We'll see who the winners and losers are in the coming weeks, months, and years. But certainly a huge day for HIMS today. HIMS and HERS, a name we don't often talk about, but certainly making the headlines today. Thanks to Kevin Green, as always. Let's bring back in Jenny here and. Let's sail the seas here with Norwegian Cruise Liners. Choppy waters, though, today. Jenny, the stock's under pressure.
Yeah, and rocking the boat. I had to add a pun in there. I was waiting for that. We're also seeing some weakness today collectively in the cruise lines, but no worse than Norwegian Cruise Line, which is down almost 12% in reaction to a lackluster fourth quarter, although there was still some good within the report. But I think this signals the fact that there are still some issues that these cruise lines are facing post-pandemic. We are not
they don't make any money
in a completely normalized world just yet, but they did report
loaded
a
with
wider than
that
expected loss in their fourth quarter as they do work to contain costs, as well as, like I said, come back from some of these constraints of the pandemic. Their fourth quarter revenue did slightly beat street expectations, and we did see occupancy improved to 87% during the quarter, and their total revenue per passenger jumped about 23% compared to even pre-pandemic levels, which were two of the brightest spots I could find in this report.
They said they are now
very focused on taking deliberate and strategic actions to best position the company for this next chapter, where they continue to pursue all opportunities to capitalize on this healthy demand, particularly during the very important wave season. But they do expect now, this is, I'd say, the huge hindrance. They do expect the first quarter to be their highest cost quarter due to lower occupancy, and actions taken to reduce costs that they have already undergone will not be materialized for now at least the midterm. So while they are admitting they're taking the necessary steps, they do not necessarily see that being relieved in this upcoming report. They are expecting occupancy to reach averagely 100% in the first quarter, and they said it should reach historical occupancy levels.
Look at the warehouse to house that thing.
But I think this company's balance sheet still remains a pretty big headwind, as they did end the year with about $13.6 billion in debt and about $1.9 billion in total liquidity. So that to me is pretty negative. We are seeing obviously shares react. Like I said, this name was up over 34% heading into today's report, now only up about 19% for the year, and completely erasing its month-to-date gain, now down about 4% for the month of February.
And this chart tells the story. We don't need to rehash why that vertical downward move happened. If you've checked the news or just existed at any point over the last 5 years, you have a pretty good idea why. But the recovery has been a little bit more troubled, a little bit more uncertain for this space. But one would have thought Norwegian, kind of perceived as the higher end in terms of the quality perception, price point, than its peers, maybe would have recovered quicker, maybe operates at a higher margin, would have been able to kind of weather that storm a little bit better, but it hasn't necessarily been the case. Although incremental improvement is to be had year over year, it's still losing a ton of money, still highly indebted. And you talked about some of those liquidity issues, not, flashing the alarms yet, but certainly not in the ideal situation. But all these names under pressure, one of them double digits to the downside, though, and that's the subject for FOMO here, which is Norwegian. I think the FOMO, Jenny, is probably to the downside today, wouldn't you say?
I would definitely say, because I also think with all the trends we've talked about, not only in hotel stocks,
I don't even understand what their FOMO segment
where
means.
We're saying leisure travel.
Like, what are they
travel
saying?
has never been stronger. I would say there's nothing more leisurely than a cruise. You're typically never getting on a cruise for business, at least to my knowledge. At least I would like that to be the case, but that is frankly not the world we live in. So if cruise lines aren't benefiting from this mass push into leisure travel, what does the rest of the year look like? And costs still just remain that big issue. So yeah, for that reason, Alex, I'd say there does seem to be some pessimism today leaning to the downside.
Yeah, I never like to say never, but I have a pretty good idea that I'll never be getting on a cruise. But we'll only time will tell. Again, never say never. Times can change.
Me too, hopefully not.
But I wanted to look at a trade illustration that was a little bit on the bearish side. Stocks under pressure here. You talked about kind of its notable decent start to the year. I won't say it was like a tremendous start because of the pressure it's been under, but certainly a better start to the year than it had. And so giving back some of that, but maybe still some room to go if this is to continue lower. Looking at buying a put vertical in the money, out of the money, kind of your classic put vertical spread on the buy side here, where you buy one strike in the money, sell one out of the money. Look for about half the width of the strikes and try to find a break even that's pretty close to where the stock's currently trading. So at the time, this stock was trading at about 1470 or so. I know it's sold off a little bit, so pricing could be off a little bit, but if you just bear with me here, kind of imagine the stock around 1470, this will, I think, make a little bit more sense. Buying the 15.5 put, selling the 14 put. If you got a 75-cent debit, the break even would be $14.75. You'd have $75 in risk to make $75 as a maximum possible profit, not accounting for the transaction fees. What is interesting about this style trade is this is the bearish version of it, but if someone was bullish and that fear of missing out was, hey, how often am I going to have this dip to buy in a name like this, you could probably flip it around and find an in-the-money call to sell an out-of-the-money call and create a call vertical spread that you're buying. But you can see this is the basically inverse of what we look at when we look at those short put verticals, where everything to the right or higher prices is typically where the profit zone is. This is the opposite. The profit zone is to the left. Break even is pretty close to where the current prices are. And what I like about this type of trade is if you have an opinion, well, you're paid if your opinion is accurate. The stock goes lower in this case, and you lose in the event that your opinion or outlook is incorrect. The stock goes higher in this particular situation. But if it's sort of nothing happens, you're near break even and kind of no harm, no foul. So paid if you're right, feel the pain if you're wrong, as opposed to some of the other strategies where we just can't be wrong, as I like to say. So again, sounds like semantics, but there is differences.
And I think the importance of also making sure you're checking actively when you are trading these names, especially given on days when you're seeing outsized volatility like we are seeing in Norwegian Cruise Line today. I mean, it has been a little bit all over the place today, but definitely still holding on to the downside move. But we'll leave it there for FOMO. Coming up next, we will look at a name now reacting more positively to its quarterly update. That is Target.
Oh, GME moved up through VWAP. Laser partners with Swiss to launch insurance program. That's what that volume spike was? Yeah, maybe. Reverse repo is at 2.1 trillion, 107 parties. Italy energy minister government should vote against EU plan to ban fossil fuel cars. Defense Chief Austin to visit Mideast in coming days. Buys moving up more. Maybe. Still just kind of consolidating here at the highs of yesterday. Well, one of the highs of yesterday. Close to the pre-market high. Binance used customer funds for its own purposes in a move similar to FTX scandal. Alb is consolidating above VWAP. I think I might want to make another move. GME's getting awful green on the day. 1.3% up. Low volume. Back up to that 1940. I think we might be getting our RSI divergence here. Mm-hmm. Happening. Well, I'm out of buying power, but I would get some more leaps on GME today if I could. I'll take another loss in that short. I could get exposure on the long term. Yeah, GME is looking pretty good. All we needed was today to be a little bit higher and we get that divergence. Biz looks like it wants to maybe move again. It's up 20% still. GME rejected 1940 again. I was just wicking hard up here both ways. Biz 22%. That gas moving up. It's only down 1.8% now. 50. See if we get some movements around 2 o'clock. Is now coming down a little bit. Still has support here on this kind of bull flag it made. You get a bearish MACD crossover. And this is a red under the 9 it's building. USO oil's rallied. Yeah, I think we'll see. We could see that again on BBBY. Oh, and there's a wick now. Spies up. Time frame. Let's say this year. Either this year or bankrupt. And even if it does go bankrupt, we've seen stocks do crazy things. Yeah, I think bankruptcy is off the table for at least a couple quarters. See what they can do with their earnings, and there is some merger, acquisition, or something like that. Yeah, Carvana's market cap still 1.8 billion. They do a little bit more in revenue. Operating income is higher though. Yeah, their net income before taxes is negative 1.4 billion. BBBY's is negative 390 million, but the revenue is only 1.2 billion a quarter.
eyewear company, retailer, that we know sort of what that marketplace looks like. And so even if it becomes a dominant player, isn't there sort of a ceiling as to what this company could ultimately be? Granted, no tremendous, innovation
Hour of
or
consolidation
pivots
for
to
SPY
other
at the highs here.
marketplaces. For investment into a non-growth,
Dip.
non-profitable company right now, what's to get my capital here as opposed to some cloud company that could just invent some new thing and be worth $1 trillion in 3 weeks?
Yeah, that's the thing. I mean, it's a really good point to bring up. And you have to consider the risks involved in growth stocks. I mean, Warby is still a growth stock. But the challenge for the company is it's still, at least on a trailing basis, is not EBITDA positive. They are expecting positive EBITDA for 2023, which actually is a complete flip from last year's losses. But at the same time, you got to think about the risks in growth stocks right now, which there is for Warby. Well, the differences really is what's the competition? And that's why I brought up Luxottica, because they are the premier global brand when it comes to luxury eyewear. Warby is certainly moving.
I'm not
into
holding
that
anything
space,
through
and they're
AMC
growing,
for earnings.
but it comes down to whether there's
People
appetite
took
for
profits
growth
today for the
companies
most part.
that maybe are not trading at a reasonable price, which
The
Warby may
GME
not
continued
be right
to grind up
The other thing is
above
if
that
you're looking for growth stocks
1940.
and you brought cloud names or software names, usually technology names that go from zero to, let's say, $1 trillion market cap, or
No, I didn't see that, Brian.
Essentially take all the market share, or winner takes all
In
market.
support of
Is that the case
BBBY.
here? So these questions you got to ask yourself.
That's
Is that the case here for eyewear?
support
Is it
for
a
the
winner take all
community.
market? It doesn't necessarily
Going
look like
to-
that's the case. So it's a growth company. Is
Going
it a
to
promising growth company? Maybe not necessarily.
destroy private
But
property.
essentially, it seems to be improving nonetheless, and I think that's one of the reasons why the shares are holding ground, despite the fact that they actually missed on earnings quite a bit for the quarter that they just reported.
Yeah, George, appreciate your thoughts. We will leave it there. Senior markets correspondent for the network. And that also does it for Alex
I'm
and
good
myself
on,
for Next Gen
seeing that.
Investing. Coming up next, we have the watch list
Worth
with
the 2
Nicole
minutes.
Petalides.
Just trying to chase attention. IV's low, but I might sell some puts on GME. $80. Dude, look at that IV at 60. 89. I'm gonna sell these. March 31st. Jeez, the ROI on that's just not great. Need to buy calls. Names A calls. Yeah, that's definitely a safer play. You must not have gotten a good entry on those buys. Yeah, there you go. It's starting to rally up a little bit. Maybe move to VWAP. See what market makers are pricing in for AMC earnings. There's 2 o'clock. See if you get some volatility. Market makers are pricing in a 15% move. So yes, Ivy is pumped. It's the highest move they're pricing in since March of 21. This pricing in 15.23%. This is the last time they priced in a higher move. They priced in almost a 20% move. That was March in 2021. it's only outpaced what they priced in once in 3 years. So even if you're necessarily right on the direction, doesn't mean you'll necessarily make money on it because of that IV crush. Okay, market's ripping up here. And it's getting shut down. GME though continues to look strong with increasing volume. Hopefully I can get some more calls tomorrow before it moves too much. Get to stay mellow. Might get a pre-earnings run up like AMC. One of these numbers. Almost at break even, well done. Yeah, the Ivy's not gonna drop much coming into close. So you've got that going for you. It'll probably just keep increasing. That gas is moving up. So even if you're going the wrong direction, it might not hurt too much. They haven't announced when their earnings are. Unless they have. I haven't seen anything about their earnings. GME starting to make a little move here, 2.15%, hitting the 1950 resistance from earlier today. Further confirming this as a support and this RSI divergence. Now all we need is SPY to dump to shut GME back down. 21% on help is, yep. Kind of double topping here. If it breaks out of here, you could chase it. If it moves back to VWAP, you could grab it. I wouldn't be buying it here though, right? I'd wait for the move to start, just not worry about your entry much. Or just chase. Yeah, you could. That's true. You could jump back in with what you made. Sure, certainly. We're estimating the earnings are March 16th. Yeah. I just made a wick up there. I'm glad I didn't close my short. That would have been the third time shaking me out if I did. Yeah, Pelbis is starting to pop up there some. Look at this. Look at all that volume on SPY. Big inverted hammer. Now SPY might be actually coming down. There it is. There's a new low on the SPY, at least from that bull flag it had. See how GME reacts. Oh. Five after 2. Whoa! Did you see the time and sales just flash red? That was a big flush. Something just come out? That was crazy. Just... Those are the kind of moves you have to already be in to catch. I'm so sore. Well, there we go. There's the SPY flush to shut GME down. We got it. Nailed it. 10 points for today at least. Oh, but see, it's kind of double topping. That's why it's like, kind of want to wait for it to confirm. But even then, it's like you have to be careful because you could get a little false breakout before flush. But if you do want to chase, set a buy for like VWAP price. If it bounces like it did here. Curse use buy 500. These stupid standard and pours. Hey, I actually have a similar entry to my short as yesterday. Actually a little bit better, a little bit higher. And in all this time, I just lost money trading it. I just held it and not had a stop loss. Nat gas is moving up more. See, it's a good thing I'm trying to time Nat gas. That dip buy would have been nice, but gotta sell us at some time. Point. Wonder if there is something going on. Let me see if I can find out. That gas almost back to break even. Tessa, where are you going? Hmm. GME is still above that 1940. Elba is holding up with that high. I'm not sure what that sell-off was from.
Sal, great to see you. Thank you so much. Sal Bruno, Index IQ. Thanks for being on the show today.
Thanks, Nicole.
Appreciate it. Still ahead here on the watch list, the CEO of Lesical will join us. It's lithium-based, get it? L-I-C-Y. The CEO joins us to tell us all about that. The state of the consumer, the Fed raising rates. What do we need to know there? And we'll dig into Target's earnings. Our panel is ready on all things retail. But up next, Technical Tuesday. Charles Schwab's Kevin Horner is standing by, and he's watching 3M and Workday. All the details next.
Technical Tuesday. Tackling fuel. Tackling fuel. Tackling fuel.
To play football. Tackling fuel. I want you that Casey is insulting you. Pretend?
Pretend?
I want you to visualize all those people that have been mean to you, and then I want you to attack. I want you to visualize and then attack. Can you handle that? I tried. Just gonna try. And then I want you to insulting you. Pretend? Tackling fuel. Tackling fuel.
Tackling fuel.
We're gonna use them to play.
Tackling fuel. Pretend? There's Hellbiz. Tackling fuel. Tackling fuel. Mama said football's a devil. There it goes. So you can play the break. Beware of the false break, but this is where you could like open it up and put a stop loss down here. Speaking of, out back in. Stop loss, nice. Nice. With something so volatile, you've got to have quite a bit of room on your stop losses. Like you can't have it real tight or you're just going to get triggered. So, I don't know where you have it, but all that green over there. I don't really know a price target on here. Like, maybe this 15 cents, 15.87. 17 cents. The gap up here, a couple gaps. Looks good so far. Doesn't look like it's. We'll see if it comes down and retests that kind of that breakout spot. That would be good. Or if it just keeps going, that'd be good. But if it can bounce here. Ooh, look at those buys. Oh, it did a little bounce there. It wicked like just above it. This thing is gonna get halted. I'm surprised it didn't get halted back here actually. Got some sell walls, 14.90 and 15 cents. It's looking good though. I mean, it's holding up above the breakout so far, which I want to see. $0.18. Yeah, I'm at 27 cents. So there. I like this one though. I like it long term, honestly. It's cool space, and then they announcing all that with Crime Fight and the Naked Shorts. Doubly good. Buys coming down some more here. This was the dip on UNG today, I guess. Crazy. That's kind of a bearish candle, that inverted hammer, but could just be consolidation before more highs. Yep, GME right on that 1940, came down somewhat SPY. Big volume spike on BBBY. Yet to make new lows. 1360 is the low on the day. Every day just a little lower. We'll probably get at least a dead cat bounce on BBY, but that won't be the move. You know, once it hits the low and it finds that buying pressure, you'll probably get a bounce, maybe to like 175 or something. Then it'll probably come back down and kind of consolidate, retest the low, and then rip. Kind of how Hellbiz is doing right now, actually. The Hellbiz is literally just bouncing from that, from it just being grinded down for like a month, and it's at a prior support, which is what BBBY is getting to. Just getting bounced. I'm just gonna go straight up. Oh, looks like it's kind of rejecting. I know, yeah. $250,000 bid, $350. 193,000 at $1.30. Tons of shares, tons of volume. Heavily traded.
Point, but if you get a close below the 200-day, that's going to have to encourage some defensive nature, I think. It still bears watching. I don't know what move is next coming, but under the 200 or at least above the 10-day, which again, right at that level, 4,039, 4,040, very important on the SPX.
All right. Kevin Horner, great to see you. Thank you for all of that.
Thanks, Kim.
Thank you, Nicole.
We appreciate you every Tuesday. Kevin Horner of Charles Schwab. Thanks. Coming up next, the CEO of Li-Cycle joins us. The company just received a conditional commitment for a loan from the Department of Energy. I'll discuss that loan and the need for lithium battery recycling. That's next here on the watch list.
That gas is almost green. No mercy. No surrender. No. You're bad gas, Jim. You're bad gas. Green gas person, I know it's bad. King is wrestling? Hmm? Yeah, I'm liking GME at this level. Looks like today we're gonna close high enough to get that RSI divergence. It's bullish. So I'll be picking up some more calls tomorrow. Over might be about to break out. Just consolidated strong up there at the highs all day. 2:30. 30 minutes CNS close. That gas is almost green. Because I was expecting more of a dip. Might still get more of a dip, but today is very strong still. Jamie broke through that 1940. E40. Oh. I kind of doing the same thing I did yesterday at like the same time. I guess it didn't really do this, but this bear flag, it's kind of bear flagging right now. About at the same time. See a flush down here. Natural gas is green. Oh boy. Oh boy. Yeah, broke it. Really, today it's just right now just broke out of that range that it's set from the beginning of the month. That high, low, high, low. So next up on the menu, this gap. Whoa, it just ripped on the futures. Okay, yeah. Thanks, Ace. Oh boy, I could add to it here. The breakout, I really don't like to. That dip was pathetic. What do I have? 3. Need more. Wait.
Your phone or the battery pack in your electric vehicle. But there's a multitude of supply chain steps to get there. And you can imagine many different materials.
I don't think they'll go bankrupt
so
either.
Now, that has been very dispersed
always a possibility with any
world.
company.
And a lot of it has been very Asia-centric, and particularly China-centric, in terms of the making of those components to go into batteries, and even battery making itself. So we need domestically, of course, EV production. We need battery production, but we also need the component production, which is what we're really speaking to here, which are those active materials in the batteries and what goes into that. And what goes into that are things like lithium, nickel, cobalt. Okay, zooming out, why is this so important? Well, we're living in an uncertain world today, and geopolitics plays in heavily to a lot of this. You can imagine without the lithium, the nickel, the cobalt, if say there's a force majeure event or something happens where it gets cut off in supply, you can imagine that the energy independence then is at risk for the North America writ large, as well as United States. So that is why this is so important from an energy independence and national security perspective.
Yeah, I mean, the Rochester hub is expected to become obviously a significant domestic source. And you have the Department of Energy, I know, also bolstering some of your peers. So the theme is on. You're in the right place at the right time, it seems, when it comes to these projects. At the same time, creating jobs. I'd like to hear more about the jobs.
Yeah, so this facility in Rochester will create 270 great, high quality, I call it the clean tech industrial revolution. So it's like the industrial revolution again, but in clean energy transition. And so that's, operational jobs. This year, we're right in the midst of construction. And so through that process, there will be 1,000 construction jobs. At the peak, we've committed to source as much of that locally as we can with our local partners. So look, it's been interesting as we go through this transition. A lot of it is heavy industry at the end of the day. And this is really a renaissance in many ways, getting back to the roots of industrial America. And life cycle's a core part of that. And what we're doing in Rochester is a great epitome of all that.
Yeah. Do you have plans for some more facilities in the next few years? If so, where might those be even regionally by section of the country?
Really busting through that resistance.
Yeah, so we have, as I mentioned, that spoke and hub model. So today in the United States, we have even a spoke, which is a shredding
you're still
facility,
in there?
In Rochester, New York, just down the road, actually, from our hub. But also in Tuscaloosa, Alabama, as well as Gilbert, Arizona. So we have pretty good
making
coverage
RSI divergence, but
around
it's on the
key
5 minute.
clusters of electric vehicle
Active's
activity,
bearish.
population.
I don't know if it's going to keep going now.
And this hub will then be that centralized place
You
where
won't
that
find it.
intermediate product goes. So for the near term and the medium term, could be more
It
spokes
might.
on the horizon.
I mean, this could have
eventually,
continuation.
But this hub is our main focus.
Rest
In
this
addition to
week.
this, we're also very focused in Europe. So Europe and North America are our two strategic regions.
Look at that thing.
Ajay Kochar, wonderful to chat with you. Congratulations to you and your team. Thank you for
Already
being
filling
on with
that
us.
gap.
President, CEO, co-founder of Li-Cycle. Thank you.
Thanks, Nicole. Appreciate it.
Coming up, we'll discuss the
Lies
Fed,
coming
the economy,
down.
what you need to know, and can the consumer really stay as strong as the Fed?
You guys talking about
keeps
negative
raising
beta on
its
GME.
rates? Much more. We'll have to break
BBBY
it
actually
back.
think has maybe some negative beta. Depending on the time frame, of course, but I think in the last month we've seen negative beta on it playing out. BY bouncing back to VWAP. All spies coming down. Another day, another stair step down on BBBY. I close this short. Whale teeth. You got the penny stock algos barcoding it. Beep, 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 beep. Guys coming down. I'm tempted to do the same thing I did yesterday on it. Take profits here and just hold it. We open up tomorrow down 2%. Me moving right on down with the SPY.
And what are you watching right now, Ben?
Liechtenstein.
Absolutely, Nicole. Multiple focal points for investors and traders as we head into the last couple hours of the trading month. The SPX down to 39.70 today before rallying back. You just pointed out we're hanging out just below that 4,000
There's VWAP.
level, and for the most part, very much limited in terms of real conviction one way or the other, right? You've got not only range bound in terms of what we've seen today, 3 of the 4 majors taking out yesterday's lows, but not one of the 4 majors, the S&Ps, the NASDAQ, the Dow, the Russell, able to take out the highs from yesterday. So, and that kind of applies to what we've seen last week as well, right? Last month, ultimately, and kind of in the middle of the range that we established basically since last May of last year. So hanging out right around 4,000. Now, the S&P is hanging out right at the 50-day moving average. I did notice the Dow for 6 days now below the 50-day moving average. It does
High
seem like
bouncing off of
investors and
VWAP
traders
there.
have come
Whoa,
a
big
bit
bounce.
more to grips with the higher for longer. Eco data earnings have failed to excite or really disappoint. So the market's just kind of in this holding
Hold or
pattern, waiting for more
close?
information. I'm looking right now to wages for that kind of last lean one way or the other. I think if we start to see wages come into play and a spiral there, that could be really concerning in terms of what the Fed's going to be forced to deal with. But if wages remain kind of muted and don't really become a concern for investors, that may help the market kind of recover and potentially retest that August high up around 4,300.
I see. All right. Yeah. And that's, people were talking about the range of 3,800 to 4,200. But when you say 4,300, you get people excited. Tell me a little bit about gold and silver.
Well, watching gold today, I mean, a big rally back.
Home prices in the U.S. declined for 6 straight months, and a key index of values down 2.7% from its peak.
1975, and I think it's partially due to what we've seen in terms of the U.S. dollar recovering back to the middle of the 105 handle recently. You've seen the TNX, the 10-year yields, 30-year yields back to just shy of 4%, and the 5-year to 4.2%. Now, one thing I've been keeping an eye on in terms of treasuries, and oftentimes that inverse correlation as far as yields and the gold, and obviously we tend to see dollar and yields work in tandem, and that inverse correlation with dollar and gold. But I've been watching Treasury futures now, basically 6 straight days. The Treasury futures and the bonds, the 10-year, have been below the 50-day moving average since February 6th. So the first time we've seen this since September of last year, and that coincided with that huge run-up that we saw in 10-year yields up to 4.3%. So again, in terms of what I was talking about earlier, I think all of this is a bit of a headwind for gold, but I'd expect that to continue to be the case, especially if wages become a concern for investors. Ultimately, that would fuel the fire for the Fed, strengthen the U.S. dollar, and further weigh on gold. But what a move we've seen from 1975 back down to around, well, below 1950, still holding below that level, but a rally back today off the extreme lows that we saw this year.
Yeah. Ben, thank you so much. Always. Ben Lichtenstein. Catch him every day on 360 as well, doing those charts. Thanks, Ben. Okay, for more on the markets, we welcome in David Donovan, Executive Vice President, Financial Services Lead at Publicis Sapient. Thanks for being here, David. What are you thinking here? I mean, the Fed has a lot of work to do. We know that. What do you think the Fed is doing in their interpretation of the latest data?
Well, they certainly have a lot of numbers to digest, and I would say that it's been, back and forth. You see numbers that still show that inflation is stubbornly high. You also see numbers where the consumer is still hanging in there. They're really, the personal spending numbers, consumer spending has been strong. But what's obvious is you're seeing the yields are the market basically telling you that rates are going to continue to go higher, that the Fed is going to continue to raise rates. I wouldn't be surprised if they raise rates another 3 times before they pause, based off what's going on, currently. Of course, that can change, but you have the 10-year up 50 basis points just in the month of February, and the 2-year up 70 basis points. All of a sudden, those yields become really attractive because they're because it's a riskless investment versus, say, alternative investments. And so that's certainly going to be a little bit of a headwind for the stock market in the short run.
And so, I'm not, raising my eyebrows or anything at the rate hikes, because I think a lot of people are agreeing with you that the Fed's not done yet. Higher for longer until they really tame this inflation. Do you think the market can still go up with higher rates? That, maybe it's not as big of a deal or as big of a hurdle as people may think?
I do think that. I think it's a psychology thing, right? Because for we've had low rates for a long period of time, but if you look at historically, these are still low rates in historical context. And we've
Health is
had some
holding up
very
well.
strong bull markets over the last
Yeah, looks like it's going to make a move
30
here.
to 40 years. So I think BlackRock was out with a note a couple of days ago where, I think that investors are just going to have to get used to higher rates. It doesn't mean that there can't be, you can't see productivity or efficiencies and that corporations can't grow their bottom and top lines. I think that, I would be, I don't think higher rates, at least in the short run, in what we're looking at, let's just say roughly it's, say if there's three rates of 25 basis
MACD is
points,
bearish,
so an
red into the
additional
9, but
75 basis points,
price
they
action's
take
been
it
pretty
somewhere in
solid.
between 5 and 6%. That's still historically very, reasonably low rates.
Yeah, I mean, really, if you look over the last, whatever our lifetime, I remember what my parents had to go through with much higher rates. That being said, I mean, they were still out there. They still bought houses. They still sort of survived and made it through. But obviously a more difficult environment when you have a higher rate environment. How will the consumer navigate through all of this?
So I think the consumer will feel a little bit of a pinch from the perspective of having to devote more of their discretionary income to servicing their debt, whether that be higher interest rates with their mortgage, if they're on an adjustable mortgage rate, or their credit cards that have rates that adjust or are more market based. So that will certainly put a little bit of a pinch on their discretionary budget. But over time, I think, like anything, people will adjust. The rates are still historically low, and companies are doing well. I mean, you're seeing that. And right now, the consumer hasn't stopped spending. So I think, the consumer is still very strong.
Right. So what did you think about some of the reports? Target and Costco, I mean, we'll be reporting. What are you going to be watching for? We're going to talk all about retail in the next segment, but what are you thinking, or what stood out to you even in the Target report?
Yeah, it confirmed that the consumer is still spending. I mean, Target's earnings were better, and I think Costco's earnings will. I think all the earnings, Walmart's were better last week. So, from my perspective, the consumer has still been spending. I think they still feel, whether their pocketbook is getting a little tighter or whether they're using their credit cards a little bit more, that it hasn't stopped them from consuming. And I also think that once there's more clarity around when the Fed will stop raising rates, that will also spur more institutional activity. I think, I work for a consulting firm that works with banks and asset managers, and a lot of their budgets sometimes are paused, not because they don't want to invest into their businesses, but more because they're waiting for the right visibility that the Fed will give them so that they can feel like they can then go and act on, the strategy that they have for that year. So it's more about the uncertainty of how high are rates going to be raised. Once that uncertainty is cleared from the marketplace, I think the market is actually going to go a lot higher.
Right. And would you consider sort of being more risky on one side and hedging on the other? I mean, what would be your more risky play?
So, I mean, for me, I think bank stocks are still really good play because, especially, companies like JP Morgan and Bank of America, because they're going to get the tailwind of the interest income when rates continue to rise. But I also think I like chip stocks like Nvidia because you saw today. There was today, I think, is the first day that you can actually apply for the CHIPS Act that the government's put in place, where they'll give you money to invest and innovate into chips that are going to power the next generation of our digital economy. So I think that bodes well for companies like Nvidia and AMD and companies that want to innovate. So I still like tech a lot, and I think that tech will continue to create that edge that will help companies be more efficient. And also when there's more of a drag on their margins from, say, higher costs from wages, then they can make it up with efficiencies through investing in technology.
Yeah. All right, David, wonderful to chat with you. David Donovan, Publicis Sapient, thank you.
Nice to talk to you. Take care.
Nice to talk with you as well. Thanks. Up next, let's talk more about Target. The stock is higher after the earnings. Did
Yeah,
give
let's.
a disappointing outlook, but there are some details.
I didn't close that short. My week. Oh, never mind. Spy's bouncing. Dang it. I'm sorry, Spy. Sorry, I said it. Sorry. Sorry.
Out of them for the quarter and what the thought process is for 23.
Emerson, I know you were also focusing on this report, the inventory issues that seem to be getting better. Did you think the outlook was cautious? How would you describe what you saw with Target?
Yeah, I think their stance today, this morning, was appropriately cautious but confident at the same time. I think they are acknowledging the realities of the macroeconomic situation.
It didn't stop me out
this year and making a couple of adaptations to it. But I think the name of the game right now, and something we're working with a lot of our clients on, is how to be agile and adaptive without being reactive. So they are making some, strategies and tactics to be in a better position this year with a lot of these macroeconomic challenges around inflation, household debt, and consumers just really worried about buying essentials to account for that and be adaptable there without abandoning their long-term strategy and their long-term investments, which I think is absolutely what you should be doing right now.
Yeah, as you talk about the investment, I mean, it is good to see traffic back in the stores. I mean, I spoke to one expert who said that there is more foot traffic. It was more than I expected. I thought it was going to be more
Alpa is just kind of grinding up here.
No, she said, in fact, people are coming back, and that's a good thing for brick and mortar. That being said, I did see a report talking about $4 to $5 billion that they're investing going forward to differentiate the customer experience,
30 minutes ago.
What does that mean? Joseph, what does that mean when they're really trying to, boost the customer experience, or what else are they spending $4 or $5 billion on?
Yeah, they're spending on new stores. They're spending on remodeling.
About to break out, I think.
Stores, making the experience better and enhancing the digital
Starting
side effects of the technology to enable the online omni-channel experience for the customer. And it's really crucial for them to do this, because if they can continue to satisfy the customer and attract that customer, drive that positive same traffic, that will generate better sales.
Now.
It
Back
generates,
to BBBY.
better profitability down the road, and all of that should be a nice cycle that you can get on. So it makes sense to us. They're actually spending a little bit less from a capital expenditure standpoint, that $4 to $5 billion, relative to what they spent in 2022. But it's still a big number, and it's good to see them continuing to invest in their business, because they are trying to drive demand and drive traffic.
Yeah, over at Telsey, what are the favorites? Target hasn't outperformed. What are some of the other outperforms, Joseph?
Yeah, we like Target. I really like Costco heading into this week. I still think Costco's one. Walmart's another name that we like a lot. I think that they're very well positioned for the current environment. And then as people start to shift back toward discretionary, both Target and Walmart should benefit from that trend, as should Costco. So those three are definitely among the names that we really do like at Telsey.
Yeah, and they said Costco membership fee may be due for a rise. I wonder if they're going to be raising that fee. Emerson, a quick thought on the big picture. Do you think some of these retailers are better positioned than others?
I definitely think so from the macroeconomic standpoint, but if you look at the macroeconomics, Target isn't actually that well positioned. So the fact that they are outperforming and planning for the future just speaks so highly about how strong the retail fundamentals are. If we look at where Target is investing, as Joe just said, right, it's new stores, it's on the store experience. But really, if we look at what they've always done to be successful, they provided great style at a great value for young families. And that's something that the executive team today kept reiterating and reiterating. We're going to provide you affordable joy. Affordable joy. So they are providing things like style, innovation, collaborations with cool brands and influencers, shop-in-shops like Ulta, and then increasingly investing in that convenience factor in those omni-channel operations, and rewarding loyalty right through the Red Circle program. So even though Target isn't necessarily in the best macroeconomic condition for a retailer that sells over 50% discretionary goods, they are still making kind of the right moves and having that long horizon point of view that is going to allow them to prepare for long-term success.
Yeah, and let me ask you this, Emerson. You did have the X factor, the remote work, and I'd like to know how this may impact these retailers. I mean, it could be a good thing if someone wants to do their morning meeting and then say, hey, I'm going to run to Target and get a few things now that I'm free. Or is it a bad thing in that people are not leaving their homes, and so they don't just walk by a store and say, hey, I'm going to pop in here? How do you think we can interpret this, Emerson?
That's tough, and it is something the executive team mentioned this morning is, one of the big behavioral shifts to come out of the pandemic that seems to be persisting is that prevalence of remote work. I mean, as you can see, I'm at home right now. I think retailers really do have to foresee what that's going to do to consumer behavior, to the consumption occasions that, consumers utilize. And right now we've seen some spending kind of veer away from the home, spend more on experiences, and of course those high inflation essential items like food. But I think that this spending more time at home is going to continue being a major trend, and retailers need to continue providing customers with everything they need to create their great home office, home environment, and also to separate those two rooms or facets of their life.
Yeah, understood. What's the final takeaway,
Joseph,
when it comes to the shoppers and this stay-at-home mantra, just even getting labor, on the other side, if they're not leaving their house and shopping? How about getting people to come in and work at the stores?
Yeah, labor has been a challenge. It is a tight labor market, and the retailers have been talking about spending more to, attract talent and to keep the stores fully staffed. So that's something that the retailers have been dealing with. It's become more of a pressure point lately. Some of the bigger box guys like a Walmart, Target, Costco can leverage self-checkout and other areas to maybe streamline things and maybe reallocate labor. But it is something that will be a headwind, I think, in the near term, as the retailers are trying to staff the stores properly and are going to have to pay up to do that.
Right, understood. All right, well, it's wonderful to see you both. Thank you very much. I'm in my home away from home. Since I've been working here basically my whole adult life, I'll call the NYC my home. Good to see you guys. Thank you both, Emerson and Joseph. Emerson Delgado at McMillan Doolittle and Joseph Feldman, Telsey Advisory Group. Thank you. Good luck. And we'll have a lot of retailers, Urban Outfitters, Ross Store. We talked about
BBBY. Come on.
Abercrombie, Costco. Big week, folks. So keep it here on the TV American
Bye.
Network.
Just at VWAP.
Nicole Petalides, thanks for being with me. Oliver Ren.
Now it's below VWAP. Considered selling my nat gas there. Said no to timing the market that much. GME back below 1940. Also wicking through, bodying through a VWAP. Alba is hanging out at the highs. SDC's rally got shut down. Coming down lower. Hour has begun. Yeah, Tesla's just held up so well the last few days. I think it's just this investor day thing. I think we're just getting a lot of hype for that. Like, this whole move didn't happen on Tesla. Just stayed flat. So I think it's gonna get big dump after tomorrow. The RSI divergence back here. Oh, we have a bearish MACD also. Just needs that little catalyst of investor day selling the news. And possibly a broken windshield. Yep, SPY is now red. Get down to the daily lows. And beyond. Clove making it happen? Not yet. SDC recovered a bit.
The dollar manages to steal the spotlight still, and our greenback kind of just keeps inching its way upward here. Higher highs, higher lows, and the 10-year yield right alongside it. Bonds
oil rallied today, though.
A tad bit firm, basically unchanged. Probably the
coming down
simplest
now.
way to describe it.
Yeah,
you do
starting to
start
come down.
See maybe some kind of plateauing, a little bit of a slow creep now that the move higher has turned into. We got
Directed
the big
right at
pop
that 50
there,
moving
the
average on
dollar
oil.
and the 10-year on Powell at the beginning of the month, and more importantly, though, the inflation data that came right after and the employment data. So you got the little dip there, and then Powell kind of marks that bottom. As we turn around, we get the strong employment, and then we get all the inflation data, and then we keep cruising. Now we're kind of resting a bit after some pretty bold moves in the dollar and the 10-year yield. I will say, though, they're both holding the key areas that I've been watching. It's 3.9 for the 10-year. It's 104 to the 105 area for the dollar. We're kind of settling in there pretty calmly. So that might keep a lid on how far stocks can go. But it's not for lack of trying. Yesterday we saw a pretty nice bounce in Tesla. We saw some strength in a few of the high beta categories, and we do get a little bit of that again today. I guess we'll test the real speculative appetite of investors right now when we get AMC.
Oh, Retta moved up.
Always a
This one I tried to open a cash grid put on earlier.
We'll see what their story, their pitch is right now. Zoom went the AI route. Can you work artificial intelligence somewhere into AMC? Maybe Spielberg's got a new flick coming out or something. Someone's going to find a way. There's no way AMC is going to get left out of the AI mania.
Probably right.
Right now, though, market continuing to show a little bit of strength in some of the high beta stuff. Most important still here is Tesla. I do think that Tesla remains unparalleled in its representation of a whole category of investing. That is the high beta growth trade, but also companies that for a long time were unprofitable and now make the transition to profitability. That is the Tesla story. And so Tesla here, I do think, remains a scion of the market and one that is going to generally give us some indication as to where risk appetite goes. Yesterday's bounce
is coming down pretty big here.
Tesla this week, it's a little changed
with
today.
The SPY.
It's pretty close to that recent high. Have to say, I think it's hard to be super bearish if Tesla gets back above its most recent high. It's just not a stock really that operates in a vacuum. It usually is an indication of how investors are feeling comfortable in growth names, in tech-focused futuristic companies. And of course, now the connection to the consumer brings Tesla a little bit more down to earth as a indicator of health for the economy. So it's a very interesting kind of growth paragon that's become a little bit more of a cyclical business and a profitable one at that. So I think it's still the most important stock to watch. The fact that it hasn't rolled over is probably the most bullish silver lining still in this market over the last couple weeks as the overall stock market has slowed down, rolled over, Bitcoin slowed down. You can also find generally some hope in the housing sector still. Data this morning showed us that in the short term, housing prices still have come off a bit as rates made that last push up. Mortgage apps have slowed down, but generally the housing strength in the home builders chart over the last year, still quite impressive. But I am starting to wonder maybe as we get kind of in the middle of the 2-year range for the ITB ETF, if perhaps the comeback from housing these last 4 months maybe has been somewhat fully priced in at this point to the market, as we're just seeing kind of a lackluster response to some of the housing data by the home builders right
engaged.
now. Okay, I got Renita Young and I got Kevin Hanks here with me. Renita, our senior markets correspondent. Kevin, a host of Fast Market. Kevin, how come things got so quiet here? No Fed speakers?
Well, certainly that's part of it. No top-tier economic data. Some earnings, maybe the biggest ones later in the week with Costco. But, Oliver, this is a very, I thought it was interesting. You and I spoke this morning about how yields were higher, but the dollar was lower because of, overall inflation had yields higher, but the dollar was lower maybe because European inflation was higher. Well, since then they flipped. Now the dollar's higher and yields are slightly lower. So I think I would call this market directionless as we get here to the final hour of February. Will we have any fireworks in the final hour? I don't know. Remember something, Tesla's got their investor day tomorrow. Watch Tesla into the close today, see if there's any trade. But obviously Goldman Sachs' investor day didn't go very well. I'm pretty sure Tesla will have a different story. But if you look at the market, Oliver, I've got 6 of the sectors of the S&P up. I've got 5 of them down. The surprising one, energy is down with crude oil higher. So a lot of things here that are a little head scratching and not really congruous. So you know what? Sometimes we just have to watch and try to figure it out later, Oliver.
Sounds like you're still with me in viewing Tesla as a bellwether for the market, general risk-taking sentiment. Think that's still a silver lining here for bulls, the fact that Tesla's hanging out at still above $200. I mean, we had quite a bit of breakdown in some of the other recent strength in the second half of February, but Tesla's seemingly unscathed.
Yeah, I mean, what hurts Tesla, right? Weakness in China will hurt Tesla. Elon Musk selling stock will hurt Tesla. But besides that, they've been telling a pretty good story lately in terms of expanding many of their factories. The sales are picking up. China looks promising going forward. So
that gas
at
hanging
least
out,
right now,
I didn't
with an
sell.
investor
GME's
day
kind
coming
of
up
flushing
tomorrow,
down here.
Tesla is certainly something worth watching. And then, of course, there's Elon Musk.
All right. Right now, some of the biggest moves are still earnings related. Renita, let's talk about that. We've got Norwegian down pretty big today. Comeback story that should be tied to reopening. It's getting punished all
that RSI divergence is kind of going away on GME.
Seeing a bleed today in market share, not by as much as one would think, but actually when you consider the fact that these companies still have a lot of debt, that's going to show through with some of the earnings numbers that I'm going to show you. Now, it was a larger than expected fourth quarter loss for Norwegian Cruise Line. The company is expecting the first quarter to be the highest cost quarter for this year, partially due to lower occupancy. Adjusted net loss was $1.04 a share. That was wider than expectations. Revenue, however, more than tripled from not from the expectations, but they more than tripled from the quarter prior to $1.52 billion, and they're up year over year. But cruise operations surged 70%, and part of that presumably could be because fuel expenses were up year over year. Norwegian's occupancy level was at 87% in the fourth quarter. That's more than what I thought, actually. But looking ahead,
the warehouse that they build those in, that's
is
insane.
Expected to reach 100% in the first quarter. That's according to the company, of course. And for 2023, Norwegian says that it expects occupancy to be at historic levels, even that. But the company also expects to sail more people than it did back in 2019. It's hoping to be better than pre-pandemic levels, and capacity is expected to be 19% above 2019 levels. It's a lot going on there, but Norwegian Cruise Line for the first quarter, it expects an adjusted loss of about 45 cents a share. Deeper than what analysts expect, so that's another thing that is really hitting this stock today. But here's the interesting thing. Norwegian says that its consumers are still continuing to spend, and that the people who usually spend on Norwegian typically have a little bit more cash to spend than the Carnival Royal Caribbean customers, and that specific customer is going to continue to travel as well. And it's not necessarily showing up in earnings, though, presumably because of as much debt as the company still has to pay off that it accumulated during the pandemic.
The bottom line here, loss, seems to be the problem. We're kind of transitioning a little bit where it was a pure revenue, no people sailing problem, just within the last couple of years. And now the demands of the market have shifted to say, all right, well, you've got occupancy back. Now you need to make sure things are running at a higher margin than they are. Oil maybe not helping, but oil's down at the low. So the energy costs are somewhat puzzling. But generally, the message that they're giving seems to be still pretty optimistic. However, chart down 12%. With Royal pretty stable, RCL looks like the way to go.
Got to recap
as far as expressing a positive view on the cruise lines. However, on the flip side, let's talk
Elba is just grinding up here.
And AAP.
Pretty interesting.
A little bit of a comeback there. And
not a bunch of volatility downside.
People are at least still spending on cars.
Still spending on cars. Actually,
Ace, thanks so much for your donut today, man. Thank you guys. Thanks, Max Pear and Taryn.
We talk about that.
Jam, Ruthless, Jan, Omega.
I went down the rabbit hole trying to distinguish a lot of the chip makers from each other when it comes to.
There's a little red on Elbis. Thanks, guys, for joining. Thanks for your subscriptions and thumbs up.
Some of them are equipment makers.
Kind of a boring day, so
makers, which is what AMAT is.
Do with it what we can. I wondered, Dink. I wondered. But yeah, we'll see you guys in the recap. Discord.
One of
them
there is a collaboration
Thanks so much, guys. I appreciate your support every day.
System.
Thank you.
Now, traditionally advanced chip making, it's very expensive, it's complex, and it does have an environmental impact because